All right, there we go. So, yo, what up for you guys watching this on the YouTube replay? CPI and inflation really tanked us today. So this afternoon, we really got a CPI report, and everything was hot. Nothing was really good. Besides oil and energy, basically every sector showed some inflation, and the markets didn't like that. And basically, what that did was really delayed the rate or delayed the odds of a rate cut in July and August and September. So the odds of a rate cut in September just plummeted, and all the rate sensitive sectors tanked today, like REITs. We go to the REIT sector. I have a whole watch list right here. The realty income, one of the top REITs, was down 3.5% today. The real estate sector is so interest rate sensitive, so this is not good. But I'm guessing this, if you have any stocks today, I'm guessing you were down over 1% if you didn't own any Nvidia or Bitcoin proxies. Basically, look at my portfolio. I am down 1.78% on the day in this portfolio. And if you didn't own any like chip sectors, your portfolio probably tanked today. And luckily, I do own some AMD. A lot of people were calling AMD, and I'm about to make a video about this. A lot of people were calling AMD for the longest time advanced money destroyer, and I get that meme. But look at this, AMD is finally on the recovery and actually has been outperforming Nvidia since the April dip. Look at this. In April, this was a $76, $78 stock, and now it's $155. So it's nearly doubled. And why did the stock go up so much today? Basically, AMD and Nvidia got permission to finally ship their chips out to China, which is great news. That was a huge earnings headwind for the company, especially Nvidia and AMD too. So actually, I'm going to do a quick analysis on AMD since I love this company so much. I'd be careful buying this one over 150 really, but I want to show you why I own this stock, why I like them. And I will say they've definitely been underperforming Nvidia in the long run. They have been outperforming them year to date, but not in the long run, because Nvidia is at an all-time high today. And as we can see, AMD is still a little bit off all-time highs. But let me show you why I love this stock right here. First off, as we know, they sell GPUs. They have a huge GPU market share, a 17% PC GPU market share. But AMD is really a data center play. Check this out right here. 50% of the revenue literally comes from data centers. And look at the growth here. I mean, this is so impressive. The data center revenue grew 57% year over year. So that's what I'm loving about AMD. And their margins are starting to grow as well. Like, look at the FCF, which stands for free cash flow. Free cash flow is up 91% year over year to $800 million. And check out the net income. Net income was up 5x to $700 million. So this is a real net margin growth story. The net margin grew 3x year over year. So great news for AMD. And they have this monster balance sheet right here. Look at this. They have no net debt. So that's the kind of reason I own AMD. And they're no longer advanced money destroyers. Same with Nvidia, even though they're at an all-time high. Yo, what up, Puncho? Yeah, hope y'all are having a good night, by the way. Yeah, AMD's been doing really good, but someone said, can we look at Apple? Yeah, let's look at Apple real quick. And yeah, if you guys got any stocks you want me to look at, let me know. I'll check them out. I'm reading both the YouTube and the TikTok chat. So here's an Apple right here. This one, I do like this name. I think this is like one of the most perfect stocks to just buy and hold for the long run. But check this out right here. They have a 19% smartphone market share. So a big market share for smartphones, obviously, because look at this. Half of Apple's revenue literally comes from the iPhone. This is insane. It's the best product they'll ever make. But then they also have the services revenue. So if you go buy something in the App Store, Apple actually takes a 30% fee on that. And that's all super high margin for them. And it's nearly $100 billion of annual revenue for them. And I'm guessing this time next year it will be. Also, look at this. Let's see. 8% of the revenue comes from their Mac. Wearables are another 8%. And then iPad is 6.7%. But here's also why Apple's really affected by tariffs, because look at that. Did you know only 36% of Apple's revenue comes from the US? So like, look at that. 25% of the revenue comes from EU, China, and then all these other countries right here. And they have the largest buyback program of any company, which is crazy. I think they're spending like $100 billion a year on stock buybacks. And you know what? I'm going to go double check that for you. So Apple's worth $3.12 trillion. So first off, that's an insane market cap. But yeah, look at this. This is how much they're spending every quarter buying back their own stock. And this is why Apple just doesn't go down. They literally spent $25 billion buying back their own stock just in the most recent quarter. Look at that. They're spending $20 billion every quarter buying back their own stock. So that's what's so great about Apple. If we go to the total common shares outstanding, yeah, you own 2.6% more of the company. Their shares outstanding just go down every single year by like mid-high single digits. So Apple's, the perfect buy and hold for the long run stock. I am finally in profit with AMD. Yo, that's what's up, Puncho. Yo, me too, man. I was down bad on AMD, especially down here. But there's my cost basis. This is that blue line right here. My average cost on AMD is $124 a share. So what up, Andrew? Andrew said Adobe stock. Yeah, man, I use Adobe nearly every day. I'm on Photoshop, After Effects. Hey, if y'all want to support me, check out my YouTube channel, Nathan Robert. I just made a video on there about my favorite stock. I would go all in this one stock. So here's Adobe though. So Adobe actually hasn't been performing too well, and that's because of their thesis is kind of being hurt right now. AI. I know some people that just made like incredible logos on ChatGPT that doesn't look like they were just AI generated, but I still love this company. The business for now is still growing incredibly, still double digits. Look at this. The digital media revenues at a new record for the full year 2024. Same with the digital experience. It's also at a new record. So for right now, they're doing incredible. And this is the after-tax net income. Look at this. They're making 1.6, 1.8 billion of net income every quarter. So incredibly net income positive and free cash flow positive. That's what FCF stands for, free cash flow. And look at that. They're making 2.5 billion of free cash flow every quarter. So they're at a super low valuation. I think that one's actually, the risk reward to buy that stock actually looks pretty good here. So I'd recommend that one. Again, not financial advice. I'm not an expert, man. I'm actually just a college student. But I would appreciate if y'all hit the follow button. We go live every day, sometimes twice a day. So here's Rocket Lab. Someone said, yo, I wouldn't buy this one at all-time highs. But I do love this company. They're my favorite space stock. I like them more than Lunar and ASTS. That's because they just acquired a company. So first off, if we go to the growth right now, the growth of their space systems revenue has already been incredible. It's up 45% year over year, but they also just acquired a company for $600 million that's going to just further help out this revenue growth. So they're already a growthy company. They're just going to grow even more. So that's why I think they've performed so well. I wouldn't really buy this one at all-time highs, but I would expect this one to continue to being a winner in the long run. They also have a huge backlog. Rocket Lab has a huge backlog of like $1.5 billion. So, yo, what up, Caden? What's up, homie? So he said CRM Salesforce stock. Yeah. Is AMD a good buy right now? Yo, it's tough. Not a great buy. I was like, I would start off with probably a little position. Oh, I also wanted to go over, I bought 3 new companies today. Hold on. I'll go ahead and share that with y'all. Thank you all for being here, by the way. I bought 3 new companies today in my Roth IRA, and I bought all 3 of these today. I bought ticker symbol GHM, DCTH, and TSSI. I literally bought all 3 of these companies today, and here's my total percent change on every stock. And here's my Roth IRA. We hit close to an all-time high in here today. Yeah, we're up 15% all time in here, but these are the 3 new stocks I bought literally today: DCTH, GHM, and TSSI. So those are my new purchases. But let's go back to Salesforce right here. And yeah, what's up, Trent? Yeah, if you guys got any stocks you want to look at, let me know. I'll check them out for you. So here's Salesforce right here. From a technical analysis point of view, this app is saying there's a bearish flag forming. So that's technical analysis, though. Let's go look at the actual fundamentals here. So I love how diversified Salesforce is. They have the #1 market share for CRM. But look at this. They own Slack, by the way. Like Amazon uses all their employees through a Slack. And look at this. They're in service, sales, platform, another, integration and analytics. So I love how diversified that they are. Let's see the service revenue. Look at that. So if we go to annual revenue, it's at a new record. Sales revenue, at a new record. So I just like showing you the actual revenues of the company. And I like to see that the fundamentals are growing. Let's see, net income. Yeah, this is the after-tax net income. Look at that. They're making 1.4, 1.7 billion in net income every quarter, and it's growing as well. Dang, in the most recent quarter, Salesforce made 6.3 billion of free cash flow. But I think the reason maybe the stock is struggling a little bit is first off the AI thesis, but the slowing growth. Like if you look at the free cash flow, it only grew 3.5% year over year, which isn't great growth, 3% growth. And also the net income only grew 0.5%. So I would like to see them kind of speed up their growth there on Salesforce. But I do love them. I think they're going to be a winner in the long run. So Trent, what's up, dude? He said SCHV. So this is the Schwab Strategic US Large Cap ETF. So let's just go to the top holdings. So yeah, Berkshire Hathaway, JP Morgan, Exxon, Walmart, Oracle, Procter & Gamble, Home Depot. These are all great companies. So in terms of their top 10 holdings, I'd happily own all those individually. So I do like that one. All right, let's see. Someone said oh, what up? Oh, OKLO and MNST. So yeah, if we go to the nuclear watch list right here, I am really that's the Big Beautiful Bill winners. Okay, so here's the nuclear watch list. So right here, OKLO, I do like this one because of the momentum. This is like the main momentum nuclear name. But there's one thing I don't like about the company, because I like to judge a company by its financials. Here's the one thing I don't like about OKLO. It's the fact that they're a startup. And if we go to the revenue right here, it says no data because they've never sold anything. They've never sold a product or a service, so the revenue's zero. But they do have some really good management. But I'd just like to see that one actually make some revenue. If I were to pick a nuclear name, I'd rather go with the ticker symbol SO, a VST, a CEG, and a GHM. I actually just bought, you see GHM right here? If I head over here to Robinhood, I bought them today, actually, again, like $100 worth. How much? So GHM right here, literally today, I bought $202 worth of that stock, 4 shares. So hey, I just like being fully transparent. Again, I'm not an expert. None of this is financial advice. I don't sell nothing. I don't have a course, a book. So I'm a college student. So I appreciate y'all being here though. If y'all want to hit the follow button. Hello, I'm a beginner. Is a Roth IRA trusted? Yeah, I believe so, Bell. Let's see. SCHG is very interesting in BRKB. So Caden said CVS stock. So this is CVS Health. I do like this one more than Walgreens, but it's still tough. Why? Because I don't really expect this company to outperform the market in the long run, but you're mainly buying this for the dividend. So if we go to the dividend right here, check this out. You're getting a 4.2% dividend, but I don't love this payout ratio. 72% payout ratio is a little higher than what I'd like it to, but here's the best part about them. They have 3 main segments of business in healthcare benefits revenue. Look at this. This is kind of like their insurance business. The growth of this business has been incredible. It's $130 billion of annual revenue for them, grew 24% year over year. So that's the one thing I like about CVS. That seems a nice growth. And they're usually making, look at that. Actually, the payout ratio is a little lower because they're actually making like closer to $2 billion in net income a quarter. They had a little one-time adjustment right there. But I do like CVS. But I don't know if that would outperform in the long run. So, what up, Kevin? He said, can we look at Zeta Global? So, is it Zeta or Zeta? I don't know. So, I actually like this company. I think this one's oversold for the good financials that it has, because everything about this company is at a record. The revenue's at a record, the profitability's at a record, but the stock isn't at a record high. Even though they've beat every expectation. They beat, like the orange line is what the analysts were expecting. They beat on revenue. Actually, they slightly missed on net income, but they beat on EBITDA. So if we go to the revenue right here, incredible. The revenue's up 35% year over year. The net income's up 45%, or their loss has been narrowed by 45%. So their margins are really improving faster than the revenue growth. This is great news. Probably this time next year, they're going to be profitable. Monster balance sheet as well. They've deleveraged like by 40% since the previous year. Cash flow is also incredible in Zeta. So this is one that is a growth company. I like that one a lot, actually. Especially at right now's prices. So, Palantir. Yeah, we'll check out Palantir. Then we'll look at SoFi as well. I do own some SoFi. So Palantir stock, this one has been an incredible performer. They're everything investors want right now. The valuation's a little high. Hold up. It does not want to load here. You think BRKB is a good buy right now with it being down? Yeah, actually, I love all the businesses that they own. What? Is Palantir really not going to load here? I might have to pull it up on the other app if this doesn't load. Okay, there we go. So Palantir, this stock is, look at that. It's pretty much at an all-time high right now. Palantir's been an incredible performer. And that's because they're everything investors want right now. 55% of the revenue comes from the government. And look at the growth of the government revenue. It's up 45% from the previous year. I mean, this is incredible growth. And that's why the PE ratio is so high. Also, if we go to the commercial revenue, which is like with S&P 500 companies, that's up 32% year over year. So just both segments of business are growing incredibly. Yeah, so many police stations are using Palantir. And also, they have no debt at all. 0 debt, lots of cash. Their cash is earning interest. They're making net income every quarter. So I can see why that one has a high valuation. But I don't know if I'd be buying that one at all-time highs, though I do love them. And I would like to eventually probably own them. So, hey, what up? Pug said SoFi stock. Let's check it out. So I do own SoFi, by the way. It's been one of our better performers. Yeah, we'll look at AMD as well. AMD crushed it today. They were up 6%. Supermicro was up 7%. Where's our SoFi though? Yeah, we do own SoFi. We are up 247% on SoFi. We've owned them for a very long time, but let me give you some analysis on them because this is your fintech play. They have their own banking charter and everything. And this is why I think Palantir actually deserves to be at a new 52-week high right now. Here's why I think they deserve that. So if we scroll down here and look at where the revenue comes from, 39% of the revenue comes from their financial services business. And look at the growth here. I mean, this is why the high valuation is justified, in my opinion. It's doubled. It's up 101% from the previous year. I mean, if we look at this on an annual basis, I mean, in 2020, the revenue was 11 million. So from 11 million to for that full year to 303 million just in the most recent quarter. So SoFi has been an incredible growth company. And if we go to the net income down here, the after-tax profits, they're actually making net income every quarter. And people are starting to really take SoFi serious when they used to lose a lot of money every quarter. So yeah, I do own that one. So I might be a little biased. Palantir has been incredible. I see $200 at the end of the year. Yeah, what up, Pug? Yeah. So let's see. BRKB. Yo, then we'll look at AMD. Yeah, we looked at them. That was the first stock we looked at. I'll check them out. Wait, BRK.B. I think I gotta type in it. Yeah, so this is Berkshire Hathaway right here. If we go to the S&P 500, the S&P 500 is like a couple percent off all-time highs, but Berkshire Hathaway is a good like 10-12% off all-time highs. Like, look at that today. They were down 1.3%. Warren Buffett did just step down as the CEO right around this time right here. And I love all the businesses that they own. Like, they own Dairy Queen, they own Geico. That's their insurance revenue right here. Look at that. 28% of the revenue comes from insurance. That's because they own Geico. They also own a little bit of Chubb life insurance. But yeah, they're such a diversified company. It's like an alternative to the S&P 500. They're kind of like an ETF. So yeah, they don't pay any dividends, but they really return money to you through share buybacks. And they have very well outperformed the S&P 500. So yeah, I do like Berkshire Hathaway. So let's see. Robbie said, thoughts on CEG? Yo, that's one of my top holdings in here. So yeah, if we head over here to my main account, look at this, by the way. We were down 1.78% on the day. RIP, drop a like on the stream for me. But one of my favorite stocks and my second largest holding, if I go to total equity right here, we have $4,700 in this stock. This is Constellation Energy. This is the #1 nuclear energy play in the world. They own the most nuclear reactors out of any other publicly traded stock. Microsoft has partnered with them. Meta has partnered with them. I love this company in every way. So it's tough to buy this one at all-time highs, but I would put this one on your watch list because the fundamentals are incredible. They're acquiring Calpine. That's instantly $2 accretive of yearly EPS. So that's when I put on your watch list. I don't know if I'd buy them over 300 really, because it probably is going to go under 300 sometime. But I hope not because I'm a shareholder, but it probably will. So let's see here. What do you think about gene editing or therapy? So yeah, I don't like the gene splitting stocks. Like if we go to Kathy Wood owns one of them. I forget the name of it. Let me just go to Kathy Wood's portfolio because I forget the name. What is it? So, oh yeah, CRISPR Therapeutics. So yeah, this is your gene splitting company right here. But here's why I can't buy this stock right here. If we look at them, they've kind of been flat. Since 2019, the stock has been flat. Here's why I just stay away from this company. Because if we go to the revenue, they're kind of still a startup. I mean, last quarter, they had 35 million of revenue. I mean, that's pretty decent. But this quarter, it was 800,000. The quarter before, 600,000. So they really don't have, wait, did they sell an asset? So, this is why I love looking. The only reason they had revenue last quarter was because if we go to the cash from investing activities, they sold an asset. They sold some other assets for 105 million. So they actually didn't have revenue that quarter. So anyway, I would just stay away from this one. They have a really good balance sheet though. No debt, lots of cash, but it's just a revenue-less company. But once they finally start to make revenue, I think they'll be a winner. Let me get this water right here. All right. Yo, what's up, guys? So hope you're having a good night. Ty said thoughts on UNH and Google. We'll look at UNH and then we'll look at Google because I do own Google as well. So The thing with UnitedHealth is, if you're wondering what happened to the stock price, how did it collapse so suddenly? Well, basically, they're being investigated for fraud right now. And if they get accused of fraud, UnitedHealth will get kicked out of Medicare and Medicaid for 5 years. And that will be devastating from their earnings because that's like half their revenue. So that's why the PE is collapsed right here. The multiple is now at 12. They're trading at 12 times net income. That's very low historically. And that's because of the risk of the future. But if they don't get accused, though, this is a great company. We're actually a customer. We use their OptumRx. And this might be why the government's not too happy with them. Like, how do you go from 35 billion to 133 billion? Incredible growth over here. So I do like the growth here, but the future's uncertain. But I do think the risk reward is pretty decent to go ahead and start buying a little bit of this one. Don't start a huge position. Don't go full size position, but start a small position in this one because I think the risk reward's pretty decent, especially after today's fall. They were down 3%. Jeez. So they have a nice dividend as well. So let's go to Google right here. I mean, this is such an innovative company. They've actually been performing pretty well. Look at that. I might need to update these lines. Oops. Uh-oh. Hold on. Okay. I'll probably replace these later. But Google, this is such an innovative company right here. They own Android. They own YouTube. Like if we in the Google Cloud business, like look at just the Google Cloud business. I mean, the Google Cloud is at a new record, up 31% to a new record. They just acquired Wiz for $30 billion. Their AI, their advertising, search advertising. But the best part about Google is actually the margin expansion. Yo, what up, Nicole? Can we check out BIT? Yeah, we'll check that one out. So look at this right here. The revenue's up 12% year over year, but the net income's up 45%. So that means they're growing their net margins. Dustin said, what app is this? Yeah, this is actually a brokerage right here. If you want to get it, it's in the link tree in my bio, the very first link there. And Google also has a 0.44% dividend. They're a shareholder-friendly company. They spend $80 billion a year buying back their own stock. So they're just such a shareholder-friendly company, and they reinvest in the business. So nice. I need cash flow, what stocks to buy. Hey, my highest yielding dividend stock actually is probably my second highest yielding dividend stock is Main Street Capital. This is a company that pays monthly dividends. They have a 5% dividend. They actually have to pay that out by law. But another high yielding one, where is this? Ticker symbol TRO. Okay, this is a company I'm going to give you guys a pitch for because I recently bought this one. And here's why. So first off, the PE ratio is an 11. So actually, let me analyze this over here just because there's more features over here. But I do own this one. So this is T. Rowe Price Group. If you're looking for a higher yielding play, look at this. This one has a 5% dividend yield. And the payout ratio is only a 54%. So they actually have a little bit of room to raise their dividend. And yeah, look at this PE ratio. It's only an 11.4. So they're trading at 11.4 times net income. And here's the best part. It's their balance sheet. This company has no debt whatsoever, $3 billion of cash, making a boatload of net income every quarter, near $500 million in net income. So this is an asset manager. The growth has slowed, though. If you go to the revenue is only up 0.78% year over year. But this one you're kind of buying for the dividend. So that's one I do own. Oh, yeah, let's go check out BIT, someone said. What is BIT? So let me know if this is what you're talking about, the BlackRock Multi-Sector Income Trust. So what's the yield here? This is a fund. So their top holdings are a bunch of bonds and IOUs. So yeah, look at this. If we go to the yield here, wow, look at that. You get an 11% dividend yield, but it looks like they just lowered their dividend from 2024 to 2025, but still an 11% yield is pretty good. Yeah, so you probably want to buy this ETF to really maximize your dividend income. You probably won't outperform the S&P 500 in the long run, but you still get the nice yield. So Crom said NBIS. So that's Nebius, and that's a company that Nvidia owns. So if we go to the Nvidia watch list right here, because Nvidia is so big, they own some individual stocks. Nvidia owns CoreWeave, ARM, APLD, and then they own Nebius. And this is a company I actually really like. And check this out. The market was down today. Nebius is up 3% on the day. So that's pretty good. Kind of everything Nvidia adjacent was up today. If you didn't own Bitcoin or Nvidia, you were probably down near 1% today. I definitely was. If I go over here to my main account, we were down 1.7%. So I just like being transparent. Please drop a like if you enjoy. I sell nothing, no course, book, nothing. I'm just on here giving my opinion. But here's why I love Nebius AI. Look at this. The revenue growth is the real winner here. The revenue is up 300% year over year. It went from 11 million to 55 million. Incredible revenue growth. They are still losing money every quarter, but they'll hopefully outgrow that. Really good balance sheet. Nvidia owns them. So I like that one for the growth. So let's see. Medi said short on SoFi. Hey, good. Hey, I could understand that because they are at like an all-time high. Crom said, what platform is this? Yeah, hey, this is a brokerage right here. It's in the link tree in my bio, the very first link if you want to get this app that I'm on. So Steve said BITO, massive dividends. Yeah, this is another dividend ETF right here. This one's, I believe they just sell calls on Bitcoin. So if you look at the price of Bitcoin, you would know Bitcoin is at an all-time high right now. But notice this ETF is not at an all-time high right now. And that's because of their strategy. They sell calls on Bitcoin. So it does underperform Bitcoin. But what you do get is an incredible yield. Where's the dividend? Wow, a 49% dividend yield. So it probably will go down by double digits every year, but still, you're buying BITO to maximize your dividend income. So someone said, can you show your whole portfolio? Yeah, hey, if you go to my YouTube channel, I literally just did a whole entire stock portfolio update. YouTube channel is called Nathan Roberts in the link tree in my bio. I'm also streaming on YouTube. Yo, by the way, the best way to support me is to go watch the stream from YouTube. I'm trying to build up my YouTube channel. And also TikTok keeps taking down my live. So, oh well. So let's go look at SYM right here. This is my favorite robotics play besides Amazon, because Amazon's the #1 robotics play, even though it's not a pure robotics play. But Symbiotic would be a second place best robotics stock in my opinion. So this is a warehouse robotics company. I'd way rather buy them than I'd rather buy Symbiotic than an RR, because RR has no revenue. But look at Symbiotic right here. The revenue is incredible. The revenue grew by 39% year over year. That's the kind of growth I trust. You know, if I'm just going to buy and hold a company for the long run, I want to see incredible growth. And this company grew their revenue 39% year over year, and they're getting super close to net income positivity. Like by this time next year, they're going to be making net income every quarter. So that's what I love about them. I've looked at their investor presentation. Their main partner is Walmart. Walmart uses Symbiotic robots a bunch. But yeah, I love them. So someone else said RR. So this is Rich Tech Robotics. This isn't one I'd really want to own, especially compared to a Symbiotic, because if you look in the top right, and this is the point, I'd be so careful with these small caps. Again, not financial advice, but you see the market cap in the top right, that's how much the whole company's worth. So this whole company is worth $198 million. So this is Rich Tech Robotics, another robotics company. And here's why I'd kind of stay away from this company. So if this would load right here, we can get their financials up. Yo, I'm sorry. I'm at a hotel right now and this Wi-Fi is dog. But yeah, this is the bad news about Rich Tech Robotics. Look at the revenue. The revenue is literally $1 million every quarter. I mean, that's bad, man. They have no IP, no intellectual property. So look at that. They did $1 million of revenue and they lost $5 million. They have a really good balance sheet though, because they've been diluting you. But anyway, that's not one I'd really trust for the long run. So let's keep going here. We'll look at Nvidia after this. Yes, sir. Yeah, what's up, guys? If you got any stocks I'm going to look at, let me know. I'll try to get to all of them here. So here's Snowflake right here. This is Palantir's biggest competitor. So this is like a huge data software place. So here's Snowflake right here. There's good news and really bad news about this stock. And here's the great news about this company. So if we go to the revenue, the product revenue is 95% of this. The revenue growth has been incredible right here. If this would load right here. Yeah, okay. So look at this. The product revenue is up 26% year over year, literally to a new record. So the product revenue is $996 million. So that's incredible. Look at the annual revenue. In 2020, it was $250 million. Now it's $3.5 billion. So the revenue growth has been incredible. But if we go to the net income down here, this is where it's not good. They lost $430 million in net income. They're losing more and more money than the previous years. So that's the one thing I don't like is the net income they're burning, and the trend isn't really getting better. So we want to see the trend start getting better. I'll see them lose less and less money. So let's go look at Nvidia right here. Yeah, we haven't looked at Nvidia today. So yeah, look at this. They were up 4% on the day. So Nvidia basically got permission from the government to finally sell their H20 chips again to China. And that was a huge earnings headwind when they originally announced it, like back here. The stock fell crazy because that was like over $1 billion in net income for them that they lost. But so there's going to be huge earnings tailwinds for this company. But yeah, first off, obviously we know Nvidia sells GPUs. My computer has an Nvidia GPU. Look at this GPU market share. It's a 20%. So really big GPU market share, obviously. But here's why Nvidia deserves the high PE and all the hype around them. Like, look at this. The revenue is literally $39 billion just in the most recent quarter. It grew 74% year over year. And it's not just the bottom line that's growing, but the top line. Like, look at this. The net income is crazy. It's near $20 billion of every quarter. And it grows by double digits every year. What was the monthly dividend stock you said? Yeah, that was ticker symbol MAIN. I think Main Street Capital is a stock I was talking about. This one pays a monthly dividend. That's the one I own. Realty Income pays a monthly dividend as well. Yo, by the way, these were the 3 most recent stocks I bought today. I bought TSSI, DCTH, and GHM. I bought those 3 companies today. So, yeah, and Nvidia is so big, they own some individual stocks as well. Someone said, why is Intel so dead? And that's because of the disappointment of the terrible earnings. What's your opinion for tomorrow? Yeah, probably won't. We probably have another red day, maybe another 1% red day in the S&P 500. But to be honest with you, I'm ready to buy the dip. It's been so long since I've seen some real good deals in the market, so I'm ready for the market to fall a little bit. But if someone's been wondering, why has Intel been so disappointing? We look at AMD, they're doing great year to date. TSM's at all-time highs, Broadcom's all-time highs, but Nvidia all-time highs, obviously, but not Intel. And here's why. So first off, they have the biggest GPU market share. That's actually shrinking. Their GPU market share is a 63%. But this is the bad news. If you go to the free cash flow here, I mean, and the net income right here, the net income's ridiculous. I don't even know how you do this, but you see that one quarter? They lost $17 billion just that one quarter. 900 million just in the most recent quarter. So they're just burning a boatload of money on net income and free cash flow. Like, here's the free cash flow right here. They're losing 3 to 4 billion of free cash flow a quarter. So they're just nowhere near profitability. Yeah, it's unfortunate for them. So yeah, and they got some debt. So Moderna, hey, is that mRNA? Moderna. Okay, so yeah, this is your pharmaceutical healthcare play. So if we look at the stock, wow. Whoa, this stock is close to like a multi-year low. So this one's been really underperforming. Do they pay a dividend? No dividend on mRNA. Yeah, so here's probably why. I mean, look at their net income every quarter. They're losing nearly $1 billion of net income every single quarter. So mRNA, this is just really unfortunate. So yeah, look at that. So because they're losing net income every quarter, that has to come from somewhere. So look at their balance sheet. You see how their assets just go down every quarter. It's so unfortunate. So I could understand why this stock is at like a multi-year low. So maybe the risk to reward actually looks pretty decent on them. I don't know. But I don't know if that'd be a great outperformer for the long run. So check this out. Someone said Netflix right here. So yeah, tariff-resistant kind of stock here. I love this company. I mean, look at their premium subscribers. It literally went from last year. They had 260 million premium subscribers. Now they have 301 million. I mean, that's incredible growth of their premium subscribers. We can see their average monthly revenue per membership, $11.69. But the profits are the big winner here. I mean, net income's up double digits. They're making literally $2 billion plus in net income a quarter. The free cash flow is just as good. So they're just printing money. They have so much money. You know, Squid Games has been a big winner. The Super Bowl was on Netflix. I mean, so yeah. Can you please review Tesla? So yeah, Tesla, this isn't one I love, to be honest with you. They just lost one of their main executives. Oh yeah, hey, I think that's that headline right here. Tesla stock slides amid executive departure. They have one of the highest, like, I forget the exact, it might be called turnover. One of the highest like executive turnover rates for like for publicly traded stocks. So many employees are quitting, but it's really weird. But anyway, Tesla is I'm going to judge Tesla the same way I would any other company. And I see Tesla right here at 177 PE, you know, crazy PE ratio, 177 times net income. And that's okay. A company can have a high PE if they're growing, but Tesla is actually declining. Look at their total vehicles delivered. It's down 14% year over year. And we could see that from their automotive business. Look, automotive revenue is 85% of the revenue. And look, it's down 15% year over year. So Tesla's not growing. I get the market cap. The growth in the future is going to be robo-taxis and like robots, but it's hard to pay that premium right now after their margins also just collapsed. I mean, no one's talking about this. Like Elon just like basically affirmed he's coming back to the company dedicated, like, and ignored like the margin collapse here. Like, look, the revenue was down 9% year over year on Tesla, but the net income was down 70%. And that wasn't some one-time adjustment. That was real. The net income fell 70% year over year. So if we go to the net margin was only at 2%. So I cannot justify, in my opinion, paying this premium valuation, which the high premium, of course, is coming from the robo-taxis and robots, but I can't pay that. So I bought SMI and caught a short squeeze. Hey, dude, I also got some Super Micro computer. They've been one of my better performers. Yo, this right here is my Webull account. This is my risk on portfolio. We were up barely on the day. All time, we're up 11% on here. So not exactly, I've definitely not outperformed the market. But where's Supermicro? Yeah, we're up 104% on them. They were up 7.6% on the day. Supermicro, after that DataVolt deal for $10 billion, the stock has just been up and up. So I really love Supermicro. SoFi as well. Someone said do SoFi. Yeah, remind me to look at SoFi. I do want to look at them. So what up, Paul? How's it going, man? He said IXHL stock. So I haven't heard of this one. So yeah, this is a company. These aren't the kind of companies we really cover on this channel. Dude, this is a $30 million company. So the whole company's worth $30 million. The stock's at an all-time low. And they lost $4 million in the most recent quarter. So they've lost over 10% of their market cap just in the most recent quarter, and nearly 50% of the market cap in the past year. So yeah, we don't really cover those kind of stocks on here. Complete gamble. That's so risky. But it could be a fun swing trade or something, but not something you really want to buy and hold for the long run. What percent of Tesla does Elon own? He owns about 8%. I wish I could pull that up again because if we just go to the shareholders like Elon Musk, I'll show you that later. But anyway, if we go to Google right here, someone said Google. Dude, I love this company right here. They're so innovative. They own Android, YouTube, Google Cloud. They own Waymo. Have anyone heard of Waymo before? Kind of coming for Tesla. The Google Cloud business is growing like crazy as well. The Google Cloud's up 30% year over year. The growth of the sales as well versus net income. Like, look, sales are up 12. Net income's up 45%. So another company that's growing their margins. Margins grew 30%. That's incredible. Shareholder-friendly company doing $80 billion of buybacks a year and 0.5% dividend yield. So OUST stock. What's this one? So OUST. So Ouster. Hey, look at that. Up 15% on the day. Well below their IPO price, but still for the past couple months here, they've been performing very nicely. Let's go see the fundamentals here. So sales of production of LiDAR sensor kits. Hey, that's niche, you know. LiDAR is what like Waymo uses and Zoox. So the revenue, look at that. Very nice growth. It's up to a new record, 33 million. So I can actually see why this company's doing so good. They're a growthy company. Normally you see companies that are doing really good in stock price having really nice growth. So the revenue's up 25. Yeah, they're losing less and less net income. Deleveraging as well by over 10%. That's really good. So yeah, I can see why that one's at a 52-week high. That's your LiDAR sensor kit play. You know what? I'll add them to the watch list. So let's see. Here, I'll show you this real quick. So someone said, how much of Tesla does Elon Musk own? So all we do is go to the company, shareholders, and look at that. Elon Musk owns 12.75% of all the Tesla shares. So that's why he's one of the richest people in the world. That's where his net worth comes from. What's 12% of, they're worth exactly 1 trillion. So his shares of just Tesla, you know, he owns some SpaceX and all these, but just his Tesla shares are worth 120 billion. Obviously, you couldn't sell all those without the stock probably plummeting, but yeah. Which app are you on? Hey, Craigton, yeah, this is a brokerage right here. If you want to get this app up on, it's in the link tree in my bio, the very first link there. So yeah. Invest in Google. Yeah, Keenan, I think Google's a perfect like buy and hold stock for the long run. Hey, someone said MU stock Micron. So yeah, this is your Nvidia competitor and they've been crushing it recently. Lowe's dividends. Hey, well, check out Lowe's as well. I do like them as a dividend play. So here's Micron Technologies. They've actually been performing very well, since April. This was a $60 stock. Now they're 120. So they've nearly, if you from perfectly the bottom, but they're up double from the bottom. So, and here's why I think they deserve it. Like, check this out. Their computer networking revenue, which is 55% of the revenue, most of the business. Look at the growth here. The revenue has doubled. It's up 97% year over year to $5 billion. So incredible growth there. And look at the after-tax net income. Look at this. It was 1.9 billion the most recent quarter. If we zoom out to last year, they were actually losing a couple billion a quarter. So they've really turned things around here. So great news because they pay a dividend as well. So I love their growth there. Let's see. Jeff White said SYTA stock. Let's check it out. So SYTA stock. And oh yeah, and then we'll look at Lowe's as well. Yeah, if you guys got any stocks you want to look at, let me know. We'll check it out. Let's see here. SYTA. So here's Zeta Mobile. So yeah, this actually isn't really a company I want to cover. The whole company's worth 35 million. And yeah, look at this. The stock's at an all-time low right now. The whole company's worth 35 million. And the revenue's 2 million. They lost 3 million. They've lost over, well over 20 million the past year. So they've lost 80% of the market cap and net income. So I can see why that one's at all-time lows. I'd be careful. LOW, as it's for a stock to hold on for the long run, that one looks a bit risky, but that could be a fun little swing trade or something, of course. But here's Lowe's right here. We've all probably heard of Lowe's before. Look at that. This stock actually has been flat on the year. Look at that. And it's kind of at the support line. So, hey, maybe around the $200 level would be a golden buying opportunity. Also, you get a great yield. Like you get a 2.2% dividend yield, and the payout ratio is only at 37%. So they actually have room to raise their dividend. Look at the PE ratio right here, a 17 PE. Historically pretty fair PE ratio. And if we go to the net income, yeah, look at that. They're making $1 to $2 billion in net income every single quarter. So very profitable company. Nice dividend growth. I know they're doing buybacks too. So. Ben said thoughts on RDNT stock and core gaming merger incoming. Oh, that's really interesting. So we were just looking at SYTA. Someone said that SYTA is merging with core gaming or something like that. So, hey, that could bring a lot of growth to the company. So someone said, hey, should I buy this stock? So let's check it out. So $4 billion company, so pretty good market cap. Let's go check them out. Did Oracle buy TikTok? I don't think so. I don't think officially, but that was one of the rumors. What's the best? Hey, this app right here that I'm on is my favorite one, the main one I do analysis for. If you want to get this app, it's actually a brokerage. It's in the link tree in my bio, the very first link there. You can see what the analyst ratings are, the valuation, where the revenue comes from. So look, imaging centers, 97% of the revenue, 98% comes from the US. Let's see how the revenue is growing. So yeah, hey, the revenue is up 9% year over year to 470 million. And they did lose net income the most recent quarter, so I do wonder what happened right there. That might be why the stock isn't at all-time highs right now, because I don't know why they just lost net income, but they're interesting. They might just be a bit slow growing right now. Let's see. VZ, what up, Trick? So he said VZ. So yeah, this is Verizon right here. So this is like a dividend play. You buy this stock to really maximize your dividend income. You're not going to outperform the S&P 500 holding Verizon, but what you do get is like a 6% dividend. So yeah, if we go to dividend right here, they have a 6.5% dividend yield, and the payout ratio is only a 65%. Look at that, 6.5% yield, 65% payout ratio. So, yeah, and if we go to the net income right here, they've been crushing it, 4 or 5 billion in net income every quarter. So if you look at Verizon stock, kind of on the monthly chart, look at this. Verizon is the same price as they were back in 1998. So if you bought Verizon in 1998, it's the exact same stock price. So again, you're not going to outperform the market, but you buy it to maximize your dividend income. I kind of own one of their competitors because I like the higher growth, but this is T-Mobile right here, TMUS, and this one has been crushing Verizon. AT&T. Has anyone heard of Mint Mobile? This company owns Mint Mobile. Those Ryan Reynolds ads have been incredible. So yeah, look at T-Mobile. So I do own this one, and I am down on the position. You could get in at a lower price than me. PFE had an upgrade by Fidelity. Yo, we'll check out Pfizer as well. So we're looking at all the higher yielding plays. Like here's Verizon right here, 6.5% dividend. Let's go check out Pfizer, PFE. So this is a company where the CEO just came out and said the dividend is safe. Well, dang, look at that. This is crazy. This is another stock. Pfizer is the same price as they were, again, back in 1998. So, I don't know if it'll really outperform the market in the long run, but if we go to the dividend yield right here, you get a 6.8% dividend with this company. And the CEO basically said that the dividend is safe. Because if you go to the net income, it's really starting to recover because they used to like lose some money. Like look at that, they were losing 2-3 billion that quarter, but now they're making net income every quarter. You know, Pfizer owns a lot of different stuff. Like Pfizer owns Viagra, for example. So, yeah. Okay. Oh, Jeff Mack, good to see you, homie. He said SEZL, and thank you all for hitting the like on the stream. Yeah, if y'all want to help me out, best way to help me out, just hit the like on the stream, hit the subscribe. We stream every day, and I sell nothing. I don't got a course, a book, literally nothing. So here's Sezzle. This is one of my favorite stocks to buy right now. And Adam said, what app is this? Hey, Adam, this is a brokerage right here. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's called Moomoo. It's an affiliate link too. So anyway, here's Sezzle right here. This is my favorite app to do analysis on. Number one, I'd recommend. But here's the incredible part about Sezzle. And this one, I love it. So if we go to the revenue is up 123% year over year. And look at the revenue. The revenue is 104 million. All right. So 104 million of revenue. The net income was 36 million. So the margins are incredible on Sezzle. 102% net margin. And hey, Jeff Mack, I want to show you something, brother. In my Roth IRA today, I bought 3 new stocks in here. So these are the 3 stocks I bought today. Ticker symbol TSSI, DCTH, and GHM. GHM is a data center play. So these are the 3 stocks I bought literally today. I didn't perfectly time this one. DCTH was down 7% on the day. But anyway, I just like being transparent. I'll show you what stocks to buy. So Sezzle is a company that's crushing it. They have actually no net debt either. So I can understand why this one's performing so good. They're on my watch list. If you can get this one at a good price, this one's definitely worth adding it into your portfolio. The margins are incredible. The growth is incredible. I wonder if it goes lower. It spiked to 180. Yeah, I agree, Jeff Mack. Incredible growth, incredible margins. I made a video about them. I think one of my second most recent YouTube video is I go over Sezzle. So let's keep going here. Odyssey, what up, homie? So he said MP Materials. So yeah, this is your U.S. rare earth mineral play. So right now, the U.S., we're trying to be independent. You know, we don't want to rely on China and all these other countries for our rare earth minerals. So basically, we're opening MP Materials with the government, with the U.S. government, is opening up a new mine. And this one mine will literally supply the U.S. for the next 100 years of all our rare earth minerals. So supposedly. So that's kind of why this stock has been on a rampage recently. So the future growth is going to be very strong here. And that's kind of why this stock has been going up so much. There's a lot of momentum in this one. I don't know if I'd buy them. After them being up 20%, you know, the SPY was down bad today, you know, but this one's been very good performer. Yeah, materials, most of the revenues. So I do like that one. Question, is Coca-Cola stock up or down? So Coca-Cola consolidated. This is the company I own. This is the Coca-Cola bottling company. I bought a share of this today. Hey, you see all those buy orders? That's where I've been buying the stock. And I actually bought a share of Coca-Cola consolidated today at 110. So this is another stock I bought today. Another one that I really love. This company pays you 6% of your money back in net income and free cash flow a year. And you're kind of just trusting the company to reinvest it for you and get a better return. So, but let me know if you want me to go. We can look at Coca-Cola as well. So if we go, that's like a Buffett play. So we go to Warren Buffett's portfolio. You know, he's a super investor. He has to reveal all his holdings. And Odyssey boy, no way, homie. Thanks for the 10 lightning bolts. I really appreciate that. So 9.6% of Warren Buffett's portfolio is in Coca-Cola. So, you know, this is a great dividend growth company. Like if you go to the dividend right here, you get a 2.8% dividend, near 3% dividend with Coca-Cola. If we go to the net income right here as well, I mean, they make a boatload of net income. What? Hey, Moomoo is free, Mr. Blast. There's no monthly fee or nothing. So that's why I love it. It's if you want to get this album on, it's number one I'd recommend. Linktree in bio, first link there. But yeah, look at the net income. Coca-Cola makes $3 billion in net income a quarter, and you get the nice. Warren Buffett owns a lot of the higher yielding plays like Chevron, Oxy, Kraft Heinz, and Nancy Pelosi, another super investor. She has to reveal all her trades by her net worth is over 100 million. So by SEC law, she has to reveal every one of her trades. So let's keep going here. Do you invest or to trade? No, Colton, what's up, dude? I mainly buy in this portfolio specifically. If you look at the top, it's called buy and hold portfolio. This is my buy and hold portfolio. Where once I buy a stock in here, I try not to ever sell it. But then like in here, this is my risk on portfolio where I own a lot of risky companies. I'll do some swing trading in here, but I have different goals with each portfolio. And this one's my dividend portfolio right here. We would look at this. We're down 1.78% in here. So yeah. All those are S&P 500 companies too. So, all right, let's check it out. So Colton said ONDS is a drone play. Yo, we'll look at Lockheed Martin too. I think, what kind of trading do you do? It'd be called more like swing trading for some, but if I'm trading, I'm usually swing trading, but I mainly just buy and hold stocks, just buy and hold them for the long run. Buy the hype, sell on the news. Yeah, buy the rumor, sell the news. So here's Ondes Holdings. Yeah, again, $400 million company. Don't know. Oh, well, look at that. The revenue did just jump up to $4 million. It's easy to grow small numbers, but they had $4 million of revenue. Someone said this is a drone company. So revenue $4 million. It used to be $4 million, then it fell. Now it's back. Again, this is just a very small company. I'd probably rather own a Kratos or even like a Lockheed Martin. This is another drone company, and Lockheed Martin's a huge play. So many military government contracts. And look at how diversified their revenue streams are. So here's Lockheed Martin, 40% aeronautics. Then they're in rotary mission systems, missiles, fire control, space. So I love how diversified Lockheed Martin is. And this is like a nice dividend play, 2.8% dividend. Did inflation really crash the market? Yeah, well, if you didn't own Bitcoin or, any chip stocks like Nvidia, AMD, your portfolio is most likely down 1% today. Like mine, I was down 1.8%. So, yo, no way. Erica, Sparky, thanks so much for the rose there. Yo, if you got a stock you want to look at, let me know. I'll check it out for you. So, buying IXHL tomorrow could be very interesting. Hey, good luck with that one, man. Wait, IXHL, was that the one we already looked at? Oh, yeah. So, hey, they're up 14% after hours. But yeah, $31 million company. I'd be careful. Let's go check out SoFi. Then we'll look at Circle. So I do own some SoFi. This is your fintech play right here. I bought this company a long time ago, man. So I've done a lot of research. It's right here. I bought SoFi January 2023. And has kind of just been holding it ever since. So let's go check out SoFi right here. So I think this one deserves to be at a new 52-week high today. So they've been performing very well. And in my opinion, they deserve it. Because if we look at where the revenue comes from, 40% of it comes from their financial services. Because this is a fintech right here. Michael says SoFi was downgraded to $17. That's probably not too unrealistic. Dang, someone said they're up 165% on SoFi. That's amazing, man. So yeah, if this would load right here, sorry, the Wi-Fi is a bit buggy today, but the financial services revenue, look at that. It's doubled. It's up 101% year over year. So that's incredible growth of the financial services. And that's why this is a great company to hold for the long run. If I'm going to trust a stock to just buy and hold them for the long run, I want to see good growing fundamentals and also, profitable as well. Profitable company. SoFi's making net income every quarter. If you zoom out to last year, they were losing money every quarter. So they've really turned around the company. Hey, Dylan, if you go to the description, it's the first link in the description. This app I'm using, it's also in the link tree in my bio, very first link there. It's actually a brokerage. It's called Moomoo. If you want to get this app, I'm on right here. So, link it. I don't know if you can see the description because it's like a, SoFi's your best earner. Yo, I think SoFi's my second or third best performing stock. I regret every share I've ever sold of SoFi, but we're up 250% on them. But on Robinhood, we are up 613%. I sold a lot of this stock a long time ago. But Robinhood, here's where I bought Robinhood. You ready? I bought it right after the IPO. It should show me. Yeah, dude, I bought Robinhood right at the IPO. And all it took was 4 years later, and we're finally up. So, all right. Where's my fork said, is Amazon stock a good buy? I absolutely think so. This is the main robotics play, but they're not just a robotics stock. This is literally an ETF in one. So a lot of people think like Amazon, they think of Amazon.com. Oops, what's going on here? So, bro, come on. So look at this. For Amazon, only 40% of the revenue comes from their online stores. Then they have the third-party seller services, and then they have the Amazon Web Services. So the AWS business is actually the most valuable part of Amazon. If you go to it on an annual basis, it's over $100 billion of revenue for them, and it brings the most to their bottom line, the most of their net income. Because the online store is low-margin business, but the AWS, number one cloud service provider, has been crushing it. They're also an advertising company, they own Twitch, if anyone's heard of that. And then they have the subscription revenue, Amazon Prime. So I love in 365 Whole Foods. They own some physical stores, Whole Foods and stuff. And this is the best part about Amazon. So the revenue on Amazon is up 8% year over year. So revenue grew 8%, but the net income is up 65%. So that means that this is another growing company that's growing their margins. They now have a double-digit margin, 11% margin, when they used to have single-digit margin, sometimes even negative margin. So Amazon has just really improved the bottom line. So Brian said Circle or CoreWeave. So we'll look at Circle because I wanted to look at them earlier. So Circle, this is your crypto stablecoin issuer. If it would load, there we go. CRC. So yeah, Circle right here. If anyone's heard of USDC, USDC is owned and issued by Circle right here. So they own USDC. And what's also crazy is the growth of Circle. Like if you look at the revenue growth, it's at a record. So are they making net income too? Yeah, they made 50 million plus in the two most recent quarters. So the Circle's one I'm looking to get into, but I want more history because they did just IPO. SoFi doesn't have crypto, I heard. Hey, they might not, but on SoFi you can get exposure, I think, to like OpenAI and SpaceX. They have like weird stuff like that. So, we just looked at OUST, but let's look at CLBR. Hey, what up, Michael? Yeah, if you go back like 10 minutes on the stream, we literally just looked at OUST, but if you remind me in like 10 minutes, we might look at them again. But here's CLBR. Wow, look at this stock. It's at an all-time high right now. So first off, yeah, congrats if you own this one. So someone said it just had a merger to list as PEW tomorrow morning. So someone's saying the ticker symbol for this stock is going to change tomorrow to PEW. So there was some kind of merger. So whenever a company merges, there's going to be a lot of growth in the future. So that's really interesting. So I wish I could give you more thoughts on them, but oh, wow, look at that balance sheet right there. Absolutely no debt at all. Lots of assets, lots of cash on hand. So that's interesting. I got to do more research on them, but that's interesting. Could you look at, PLBY. So this is an interesting stock right here. So they are like a micro cap. This is only a $160 million company. So extremely small company. So, that they sell those like newspapers, if you know what I'm talking about. So licensing, how's that doing? So they get some high margin licensing revenue. Hey, that's 11 million. But what about the net income here? So are they even profitable? That's probably so they are heavily leveraged. If you look at the balance sheet, look, they have more liabilities than they have assets. So not great. Yeah, and they're losing net income every quarter. So to be honest with you, man, while it's a niche stock, I can't buy that one. The fundamentals just aren't good. More liabilities than assets, losing a bunch of money. But let's go look at DOOR, which is Open Door. Isn't that OPEN? We'll check it out. Unless they changed their ticker symbol. No way they changed their ticker symbol. We'll type it out. Open Door. Yeah, I can't find DOOR. Two people said DOOR, and I can't find it. All right, let's keep going here. So, wait, what was the stock someone just said? Oh, yeah. TSM stock, yeah, Taiwan Semi. So this is a company I'm obsessed with, and they absolutely deserve to be at an all-time high. They're up 4% on the day. They make those 5 nanometer wafer chips that are used in everything. Like your car window probably uses one of them. So like, look at this right here. Their market share went from 61% to 67% for these wafer chips, which is incredible. And also the margin growth here. If we go to the net income, they're literally making 10 billion of net income every quarter. And it's up 55% year over year when the revenue's up 36%. So another company that's growing their margins incredibly so. And if you buy the stock, even at an all-time high, right now, if you buy Taiwan Semi, you still get an over 1% dividend yield. So very nice yield on Taiwan Semi. So Ryan said ASML supplies Taiwan Semi. You know what? So yeah, ASML has three main customers. I think it's Taiwan Semi, Nvidia, and Samsung. So no way, yo, Blue 414 for the 25 roses. I really appreciate you, brother. Oh, we'll look at Baba. We'll look at Alibaba too. Remind me to look at that stock. I want to get to all these here. Do apologize if I don't get to all the stocks here, but ASML, everything about this company is at a record. All their financials, all the fundamentals are at a record, but the stock isn't at an all-time high, which is a little weird, but revenue is up 50% year over year, incredible growth, and the net income's up 93%. So a huge margin growth story again on ASML. They also have a near 1% dividend. Their dividend kind of changes every quarter, but yeah, they're kind of like the lithography play. They're the chip making manufacturers for Nvidia. And I remember the US government had to come the Chinese were trying to steal ASML's IP in their machines to try and reverse engineer how they work, but there's software where they couldn't. So, oh, yo, Dante, no way, homie. Thanks for the donut, man. I thank you so much, man. He said, what do you think about Progressive going into earnings tomorrow? Does Progressive report tomorrow? Yo, that is actually my most recent purchase in here. So literally my most recent purchase has been Progressive Corp. So I do own 2.4 shares of them. I'm going to say the earnings are going to hopefully be good. Oh, then we'll look at Albertsons and remember to look at Baba. I want to look at all these, but I'm probably going to forget. But here's Progressive right here. This is a company that even though the S&P is close to all-time highs, this one isn't at all-time highs right now. And that's why I just bought this one. This is an insurance company. You've probably seen the commercials of Flow and stuff. But look at the growth here. I mean, incredible. Revenue's at a record. It grew 23% year over year. I mean, look at the annual revenue. It's 60 billion for the full year 2024. They're also in our commercial lines. That's 14% of the revenue. And look at that. It's also at a new record. So Progressive, incredible growth company and also incredible margins. Look at this. They're making 2 billion of net income a quarter. Incredible margins. So if we go to the PE ratio, look, the PE is a 16 or actually and the industry average is a 14. So they deserve the premium valuation, in my opinion. But I love Progressive. Another insurance stock I like is PLMR. I want to look at, I'll be super quick. This is an earthquake insurance stock, it sounds like someone would scam you on, but earthquake insurance company right here, Polymer. And the best part, the only thing you really need to know here is look at the net income they're printing, up 62% year over year, making so much net income. So ticker symbol PLMR, that's your earthquake insurance play. Another one I'm actually considering buying the dip on. So let's look at Baba, then we'll look at Meta. Dude, I love Meta. Oh, and Albertsons. I want to get to all these. I'm so sorry, but we'll go quick. So here's BABA, Alibaba right here. So this app is telling me there's a bullish continuation wedge and the rise probability is 90%. Well, that's technical analysis. As you know, I like looking at the fundamentals because that's what's most important. So the PE is a 15. They are Chinese. Has anyone heard of AliExpress before? They own that. Active customers are 903 million. So they have 903 million annual active customers. And the best part is kind of the bottom line here. Look at that. They're making $1 billion the most recent quarter, $6 billion the quarter before, $6 billion. So Alibaba is just making a boatload of net income. They're an e-commerce play. Let's see. Yeah, they are Chinese, but they have a lot of customers, and I think they just started paying a dividend. So a 0.9% dividend. So they're like the Chinese Amazon. So let's look at Meta, then we'll look at Albertsons. So this company has so many earnings tailwinds. I mean, they just put ads on WhatsApp. They just took a 3% stake into Ray-Bans, the parent company of Ray-Bans. And has anyone heard of the Threads app? The Threads app now is nearing the same amount of daily active users as X. or formerly Twitter. So anyway, look at the daily active users. Obviously, they own WhatsApp, Instagram, Facebook, Threads. They have 3.4 billion daily active users. So pretty much half the world is on a Meta app once a day, and the margins are incredible. This is a $2 trillion company with 40% net margins. I mean, it's nuts. They're literally printing money. Revenue's up 16, net income's up 34, another one growing their margins, but the net income is just crazy. And they just bought half of Scale AI. Has anyone heard of Scale AI before? Oh, and Mark Zuckerberg, obviously, he might be a robot, but he's such an innovative guy. I mean, he owns 13% of the company. A great CEO. Let's see here. So ACI stock. So this is your grocery store play, kind of like a Kroger. So Kroger actually tried to buy Albertsons, but the DOJ didn't allow it. So here's Albertsons right here. Yeah, they're the same prices they were back in 2021. So they were down 5% on the day. I wonder what happened to Albertsons today. But yeah, here's the dividend. You get a 2.5% dividend yield with this company. What's the PE ratio? I do wonder. It's probably low. Yeah, so yeah, it's a low margin business, but they have a 12 PE. They trade at like a Kroger valuation. But look at this. They're making money every quarter. 340 million a quarter. So, and revenue is up 2.5% year over year. So Albertsons did a beat and raise, and they still went down 5%. That's really weird. I didn't know they reported earnings today. Yo, Korn said, what app is this? Hey, this is a brokerage that I'm on right here. If you want to get this app, it's in the link tree in my bio, the very first link there. It's the number one app I'd recommend if you're like, just for any, it's free. There's no like monthly payments or anything. It's a completely free app. And I keep my idle cash in here because you get the nice monthly or the interest. So that's in the middle of my screen, but let's keep going here. Fiserv, what's the ticker symbol for that stock? I don't know what that is. What up, legend? Or, I got you. I'll type it in for you. FISCRV. Oh, okay, ticker symbol FI. All right, let's check it out. So this one hasn't done too good recently, but let's go analyze them. So no dividend payment on the company. So they're a financial and merchant company. So the sales are up 5% year over year. Merchant revenue's up 5%. So the business is growing 5%. Revenue's up 5%, net income's up 12%. I don't know why the stock is doing so bad. I mean, they're printing money, 900 million of net income a quarter, pretty good balance sheet. PE's a 29, so maybe a slight bit high on the PE. It probably is just because the revenue is only 5% and the PE was like a 35. Actually, it makes sense around this price. So actually, Fiserv is probably pretty goodly valued right here. That's interesting. Yo, Alex said, what's up with SoFi? Yo, we just looked at SoFi a few times. We'll look at them again. Huge fintech play, one of my biggest performers. Where's my SoFi stock? Yeah, look at that. We're up 250% on SoFi. So the growth, the net income positivity, I love. Remind me to look at them. So Bob, how's it going, man? Hope you guys are having a good night, by the way. I normally don't stream at this time. And, it's 11 p.m. for me. But I'm trying to stay up with you guys. So here is APLD stock. So if we go to NVIDIA's portfolio, they own some CoreWeave, ARM, and then the third largest holding is APLD. Now, this is your data center hosting like company, cloud service hosting. So, and they just had a huge partnership with CoreWeave. So CoreWeave and APLD went to a huge partnership. That's why they gapped up right here. And they're up 5% on the day. So basically, here's what no one really talks about. I like showing it. The cloud service business right here. Look at the growth. It is up 220% from the previous year. So that's incredible growth. At this growth rate, what's it going to be this time next year? So incredible growth in the cloud service revenue. And they just partnered with CoreWeave, so it's probably going to be higher in the future. So NVIDIA does own some of that one, and I think that one's going to do pretty good. SMR or CEG? Yo, I'd go with the CEG because SMR barely has any revenue, like barely. User said FNMA stock. So is it good to get into SoFi? Yo, we'll look at SoFi. Yeah, I got you. And we'll look at Open. What up, Endless? How's it going? So this is a $10 billion company, Federal National Mortgage Association. So let's go look at the financials. So, this is like a real estate company. So single family, multifamily, Can we see net income? Yeah, look at that. That's why they're making 3-4 billion in net income a quarter. I do notice the sales are down 5, net income is down 15. So they still have crazy margins, 50% net margin, but the margin did fall a little bit. But still, incredible margins on this company. I can see why they're doing so good. Pershing Squared's the largest shareholder. So Bill Ackman in Pershing Squared is actually the largest shareholder of that company. That's interesting. If anyone know who Bill Ackman is. So Open Door. So this is a company I actually don't like because I do think they're going to go bankrupt eventually. But look in the top right. Here, I'll just show you what I mean. I'll show you the numbers for yourself. So if you look in the top right, the whole company is worth $750 million. So think about that. Remember, the whole company is worth $750 million, and they lost $85 million just in the most recent quarter. The quarter before, they lost $100 million, then another $70 million. So they've literally lost like 30-40% of the market cap just in the past year. So this company, in my opinion, has huge bankruptcy risk. Again, not financial advice here. I'm not an expert. I'm just a college student. But what's the short interest? Dude, whoa. Short interest is 20%. So 20% of all shares are being short over there. I'd be careful with that one. Could be a fun swing trade, though. That doesn't take much to move them. But not one I'd hold for the long run forever. What up, Enhanced Utility? I hope you're having a good night. So let's go look at SoFi right here. So this is one I do own. I'll be quick about them because we've looked at them a few times, but this is one that I think deserves to be at a 52-week high, and that's because of first off, lending revenue. Lending is half their business, and the lending revenue is up 25% from the previous year. So lending revenue has grown 25%, but the main winner here is actually the financial services. They actually got their banking charter through a loophole that's now patched because of them. It's pretty incredible, but the financial services revenue is now up double. It's literally doubled, up 101% year over year. So incredible revenue there. And if you go to the net income, they're literally making 70-80 million in net income a quarter. So incredible. Well, we got Jim Cramer in here. He says, you're promoting your own stock. Goofy. Me covering it will have any influence on it in my $250 SoFi position. All right. Let's see here. I used to work for Accutenture, federal worker. I wonder how they're doing. Oh, let's check them out. What's the ticker symbol? Is it ACN? If that's not the ticker symbol, can you find it for me and I'll analyze them for you? Oh, yeah, no. I guessed it. No way. So here's Accenture. I'm probably saying that wrong. Accenture. So let's go see how they're doing. So they actually have not been doing too well recently. Oops. Look at that. The stock has not been doing too well, but they do pay a dividend. Let's see, a 2% yield. Look at that. They raise their dividend every year. Very nice. The PE is a 21, so that's a low valuation. Historically, that's the cheapest valuation it's been in 5+ years. So very low valuation. Is the business growing? So pretty good growth. The revenue's up 7.6% year over year. Net income's up 13, so they're still growing their margins. It's a pretty good company, actually. I think they're probably a little oversold right now. SMR, endless return potential, triple S 3 months. Sorry if I should sell. I'd maybe trim a little bit on that one. So someone said Adobe. Yeah, this is the company that owns Photoshop. And I use Photoshop After Effects every day. But the thesis is being a little hurt here. Like in 10 years, we might not need Adobe. Because I know someone who just made this incredible logo with ChatGPT. So that's the one thing that's kind of hurting this company and kind of collapsing their PE. Same with Google right now. Like Google's PE is collapsing because they're scared of the AI thesis. But for right now, Adobe's doing incredibly. The financials are at a record. They literally just hit a record every metric. The net income was at a record. It's up crazy. The free cash flow is crazy. They're making over $2 billion in free cash flow a quarter, nearly $2 billion in net income a quarter. So I love them. But it's. I actually think this one's a bit oversold right now. But yeah, the revenue's at a record. But yeah, they're doing incredible buybacks. They're buying back like 3% of the company a year. New to this, what does the PE mean? Yeah, so the PE, like if a company, like Coca-Cola Consolidated right here, Coca-Cola, it says they traded at 17 PE. That means they trade at 17 times net income. The PE ratio is just the net income multiple plus any stock buybacks or dilution. Let's see, then have 6 months leave. Oh, what's up, Endless? That's awesome. Keep an eye on IXHL next week. Hey, bet. Love SoFi. Yeah, me too, man. So let's see. Call Carve said PONY. What is this? Pony AI. Oh, so I think this is like an autonomy taxi driving. So I think this company is kind of like uh an autonomous driving, like a Waymo. Yeah, so look at that. Artificial intelligence based robot designed for autonomous driving. So this is an autonomous driving company, and they don't have pretty much any revenue right now. Like the revenue was 13 million in the most recent quarter, so not much. But they have a monster balance sheet. This is kind of the best part about the company. Absolutely no debt on the company and $630 million of cash. So $630 million of cash, no debt, and the whole company's worth $4.6 billion. So 25% of this whole company, just cash on hand. So there's no real bankruptcy risk. One World said, what app is this? Yeah, hey, One World. This is a brokerage right here. If you want to get it, it's in the link tree in my bio, very first link there. It's my favorite app for like analyzing a company. So how do you feel about CORZ? Hey, CORZ just got acquired, right? By CoreWeave. So it's all acquisition stuff. So wait, I'll pull it up. CORZ. Or I don't know why they fell actually. So anyway, Cores is being acquired by they're like one of the top Bitcoin mining companies, I believe, being acquired by CoreWeave. So, all right, let's see. Caden said PRVA could be good with value-based healthcare. So we'll check it out. $2.5 billion company, and the stock has kind of done nothing since its IPO. But let's go look at the financials because that's what really matters here. And let me get a drink of my water real quick. So the revenue is specified as care for its patient needs. So what's the revenue? Wow, that's actually a lot of revenue. 480 million of revenue, up 15%, and they made net income on that. These are very low margins. What's the margin here? A 1.2% margin, but still, I love that they're actually profitable. Pretty good balance sheet as well. A little bit choppy cash from operations, but still growing nonetheless. So hey, this one's actually not too shabby, but I'd like to see a little bit more growth there. Oh, here's an interesting one, Lyft. So there was a rumor that this would be genius for Tesla to buy Lyft. It would be really smart for Tesla to do that, I think. But this is like the small out of Uber, DoorDash. This is like the smallest play, unfortunately. Actually, I think we can do like a little versus compare. I might pull it up. So we can do Lyft versus Uber. I just want to see the market cap difference. And DoorDash, so ticker symbol Dash. All right, let's see. So market cap. So yeah, here's the market cap. Yeah, on the left is DoorDash, or on the left is Lyft. Lyft is worth $6 billion. Uber's worth 192, and DoorDash is worth 100 billion. Let's see. No dividend on any of the companies. What about the ROE? So yeah, that's why Uber is the biggest one. Their ROE is at 8%. Return on assets is 3%. Yeah, but look at the net margin. The net margin at Lyft is the lowest because they're just not getting profitable. Anyway, that's why I think Lyft has been a little bit of an underperformer. Because if we look at this right here, the net income just now got net income positive. If we zoom out to right here, they used to lose a boatload of money, $300-400 million a quarter, but now they're actually making net income. So that's the best news ever for them, that they're finally starting to make net income. The free cash flow is ridiculous over here, 280 million of free cash flow, but most of that gets eaten up by stock-based comp. That's why the net income's so low compared to the free cash flow. But still, great news for Lyft. They're in a great spot right now. So Jace said SOUN. So let's check this out. So SoundHound AI, this is your subscription AI play. So there's good news and bad news about this company. Here's the good news, and this is the main thing you want to watch whenever they report earnings. This is what you want to watch. Their subscription service revenue. It's all reoccurring revenue. But look at the subscription revenue. It is literally up 585% from the previous year. So incredible growth of their subscription revenue. And at this growth rate, what's it going to be this time next year? If it just 5x'd from last quarter, what's it going to be this time next year? But bad news, look at their royalties. The royalties used to make up a huge segment of their revenue, but it's down 43% year over year. So the royalties have kind of collapsed. I wonder what happened there. And this company is losing a lot of money, like 50 million in the most recent quarter. So I'd like to see them get profitable, but you're mainly watching the subscription revenue growth right there. Oh, here we go. So, MATX. What's this company? Matson. Let's check it out right there. So, I've not heard of this company. So, a $3.6 billion company. They trade at a like it was just at a 7 PE. Yeah, look at that. The PE is a 7, but the industry average is a 4. So, what do they do? Ocean transportation. Oh, so this is a shipping company. That makes sense. They probably have a higher yield. Oh, actually, no. A 1.22% dividend yield. The payout ratio is only a 9%. So they do have a lot of room to raise the dividend. So yeah, they're a shipping company. They ship like cargo on boats over the ocean. And look at that net income. She'll add this one to the watch list. It's probably one of the better run ones. I like this one more than a Zim. So, um, let's see here. Check MOD, please. Yeah, let's check it out. Modine Manufacturing. Okay. So I've heard of this company before. What do they do? So climate solutions. So they do HVAC for data centers and stuff. So yeah, this might be an HVAC play. So look at that. Yeah, climate solutions, which I'm guessing is HVAC, is 56% of the revenue. Then they're in performance technologies. Where's the revenue come from? Look at that. Half comes from the US, then Canada, Italy. So I like the diversification. And look at the climate solutions revenue for the full year, or actually fiscal year 2025. It's up 30%. So great news. What about net income? Yeah, look at that. They're making near 50 million in net income a quarter. So I like that one. Has SoundHound made a profit yet? No, Michael. SoundHound is losing a lot of money. Lost 50 million the most recent quarter. Um, Actually, the net income says that they made money, but it's actually they sold an asset. It was a gap net income like adjustment. They actually lost 50 million of operating profit. So what's the next Palantir? Oh, he wasn't asking for Palantir. Yo, the next Palantir, in my opinion, is a company I bought today. So I'll show you guys. In my Roth IRA today, I bought 3 stocks today. I bought TSSI. These are risky, super risky companies. And hey, Blue41, thanks for the hot dog, dude. I appreciate that, man. I bought GHM today, DCTH, and TSSI. I bought all 3 of those stocks for the first time ever today. So, yeah. I think those could be the next Palantir. There's a super growthy companies. So let's see. Someone said PI stock. What's this company? Oh, let me look at THN. I don't know what that is, Dylan. Is that a ticker symbol? Because if it looks like that, it might be a really small one, or OTC. But let's see. So $3.3 billion company. They haven't been performing too well recently. But let's go see what they do. So developing and selling are RAIN products. So I don't know what that RAIN radios, manufacturing, test, encoding, reading systems. So it sounds niche, but let's see. Are they profitable? So they lost net income in the most recent quarter, and that was real. So that's not good news. Yeah. So the revenue fell 3%, but the net income is down. So I can actually see why this one hasn't been performing too well. Like the market's near all-time highs and this one isn't. I can understand that. So I'd like to see them make more consistent net income. You are the best. Hey, CYIA, thank you so much. And hey, Jay, no way. P&W? Yo, is that Palo Alto Networks? Yo, Jay, thanks so much for the 3 roses there. I think Nancy Pelosi just bought that stock. Actually, let me go over to that real quick. So, sorry, my Wi-Fi is kind of bugging right now. Dang, it's 11 o'clock. Yo, I appreciate y'all being here. Hope you're having a good night. So here we go. Nancy Pelosi, obviously she's a super investor. She has to make all her trades and portfolio public. And if we go to her portfolio, oh wait, never mind. She said P&W. That's not Palo Alto. So, oh, this is Pinnacle West. Yo, this is one of my favorite utility companies. So this company in particular, Pinnacle West, has seen a lot of demand from data centers. So I love this one as a dividend play. If you go to Pinnacle West's dividend, you get a 4% yield here. So very nice dividend yield on Pinnacle West. This is a regulated utility. So you don't really look at the net income here, but Pinnacle West, I've came very close to buying this company before. I love where their utilities are. So I do really like them. Miguel said DN in stock. What's this one? Denshin Mines. Oh yeah, this is your kind of gold play. So They own a bunch of gold mines and stuff like that. So if we go to their revenue streams, yeah, look, mining is all their revenue. Um, no dividend on this company. What about net income? So, yikes, they did lose net income in the most recent quarter. Yeah, because look, so whenever a company loses net income, that money has to come from somewhere. So that's why their assets kind of just go down every quarter. So I like to see this one get net income positive. I believe this one just owns a bunch of, oh no, so not gold mine. I think it said uranium mine. So yeah, this is a uranium company. Okay, so actually, yeah, actually that makes a lot more sense. If we look at, I think it's UUU. Oh wait, or is it UNM? No, URA, I remember now. URA, this is your uranium ETF. And look at uranium. It's the ETF, it's at an all-time high right now because there's so much demand for uranium from nuclear sites. So if you go to where the revenue or their top holdings, it's Cameco, which is honestly the best. This is the best uranium play, Cameco. They're Canadian. Let's see. Thoughts on BXSL? Is that Blackstone lending? Yeah, I think this is one of the higher yielding like BDCs, I believe. Yo, Legend or Legrand. No way, man. Thanks for the 2 roses. Yeah, we'll look at UNH. Don't worry. We'll check them out. So this is Blackstone lending. Yeah, so if you go to the dividend yield, look at that right there. They have a 10% dividend yield, and that's because they're a BDC, and actually by law, they have to pay out 90% of their taxable income in the form of a dividend. So that high yield is actually not abnormal. So look at the net income. They're making 100, 200 million a quarter, but the net income did fall 18% year over year. So maybe that was a one-time adjustment though. But yeah, I like that one for the yield. You basically buy that to maximize your dividend yield. What does TSSI do, and how is the fundamental? So yeah, this is TSSI right here, and this is actually a company. If we go to, I kind of just shared this, but I bought 5 shares in them. This is a company you can't start out as a huge position. You buy, and then we'll look at UNH. Oh, so sorry. We'll look at UNH after this, but this is down 1%. I bought them today. I only put $100 in the stock, but here's why I love TSSI. So look at the revenue right here. Actually, it's better down here. The revenue is literally up 522% from the previous year. So the revenue, incredible growth over here, and they're making net income every quarter. Look at this. They're making 1 to 2 million in net income every quarter. So, and the whole market cap is 500 million. So think about that. Let's say you buy the whole company at this valuation, you buy the whole company at 500 million, where you're buying a company that makes a couple million every quarter of after-tax net income, and one that's growing like crazy where the revenue is up 522%. So that's why I actually just bought this company today. Here's, I guess, what they actually do. So the fulfillment segment, actually, I don't actually know exactly what they do. I looked at their investor presentation briefly, but the financials really won me over on TSSI. Also, let's go look at a UNH right here. So this one, yo, what is Think? Is that a ticker symbol? Let me know the, oh, that's the ticker symbol. Okay, yeah, we'll check that one out too. So here's UnitedHealth though. So UnitedHealthcare, the PE has collapsed on this company recently. And that's because if they get accused of fraud, they're going to get kicked out of Medicare and Medicaid for 5 years. And I think the risk reward actually is pretty good on this one right now. I would, not financial advice, I'd pick up this one at 290. I think the valuation's pretty good here. The PE has collapsed, obviously, because the future growth is uncertain. The future is uncertain here. So go to United Healthcare and OptumRx. We actually are a customer. We use the OptumRx, and the revenue annual is $133 billion. This has seen some really nice growth. The dividends right here are very nice, 2.9% dividend yield on this company. So you got to be careful of the future because it's a bit uncertain. But this company is literally priced to for the net income to fall 30-40%, and I don't think it's going to do that. So I'll look up this ticker symbol though. I think it's going to be a little bit risky. THN. CF. So we might not be able to find it. Yeah, unfortunately, look at that. It's showing like news about it, but we can't actually view that ticker symbol on this. So I do apologize there. What about BULL? Hey, yeah, that's Webull. Yo, actually, I have a Webull account. So I look here, I'll show you that. I just like being fully transparent. I've probably given them so many fees and stuff. So here's my Webull portfolio. By the way, we have not outperformed the market. I just like being fully transparent. We're only up 11% all time in here. So yeah, we've definitely underperformed the market. But they just IPO'd right here. Only like 6% of the company is publicly traded. So that's why the stock is like had so much volatility. Like only 6% of the pizza is available to trade, making that one slice of pizza look really valuable. So good news, they are finally net income positive. Like they just IPO'd, so there's not too much history. But in the two most recent quarters, they did make net income in those two quarters. And I think this one's eventually going to trade like a Robinhood stock where they're kind of like a Bitcoin proxy. So I use the platform, so I do like that one, but I got to do more research on them. I know they have a complicated share structure. So do you trade options? Not really. I haven't done any options in a while. What did you buy at the bottom in April? Yo, David, that's like a great question. I bought a lot of stuff, or really two main stocks in the April dip. The first one is APH, Amphenol Group, literally almost perfectly, very close to the bottom here in April. We loaded the boat on this company. This is a provider of copper cables to Nvidia. Nvidia is like the reason the stock is performing so good. Nvidia has a huge order with this company of copper cables, and their new Nvidia NVLink spine product uses over 2 miles of copper cables, and most of that's supplied from ticker symbol APH. So that's a cool one. And also another stock I've been loading the boat on is FIX during the April dip. Actually, my very most recent YouTube video, I did a whole analysis on FIX right here. So if you want to see a whole analysis on FIX, why I made this company my largest holding, go check out my most recent YouTube video. My YouTube channel is called Nathan Robert. It's in the link tree in my bio. I sell nothing. I don't have a course, a book, just on here giving my opinion. But the best way to support me, go watch the YouTube videos and subscribe to my channel. I'm also streaming on YouTube. If you miss anything, you can watch it on the replay. So let's look at Rocket Lab right here. Look at that one at a new 52-week high today, up 3% on a day where the market hasn't been doing, where the market was down pretty bad. So this company is my favorite space stock, way better than ASTS, Space Mobile, and Lunar. If you go to the revenue, their space systems revenue, the growth is incredible. It's up 44% year over year, and that doesn't include a new acquisition. They just bought a company for $600 million, so that's going to make the revenue grow even more. And this company, Rocket Lab, has a backlog of $1.5 billion of orders. So huge backlog, nice growth. They are losing a bit of money right now, but they'll kind of outgrow that. What apps do you use to buy in? Is it only Webull? No, Kawa. This is my favorite app right here, this brokerage. So this app I'm on right now is my favorite one for analysis. If you want to get it, link tree in bio, very first link there. So it's called Moomoo. TBH, I'm going on Pepsi right now. Yo, Pepsi, this one has a nice yield. And I trust Pepsi, a little bit, almost more than a Coca-Cola, because Pepsi, they have the Frito-Lay business. I want to pull up Pepsi, but sorry, my Wi-Fi is being really bum right now. Oh, crispy, no way. SoFi and Hood have run up so much lately. Large percent of my portfolio, so they may take. Hey, that makes sense, crispy. If they're if they're an uncomfortable amount of your portfolio, trim them, and if they go lower, then you could buy more of them. So that's a good idea. I actually did that recently with a few stocks like Dave, but. Let's look at PepsiCo right here. Look at this one. They're well off all-time highs, All-time high was 180. They're 130 right now. Look at the dividend right here. Pepsi has a 4% dividend. The payout ratio is a little high, 76% payout ratio, but still safe. And if we go to the net income right here, they're making net income every quarter, $2 billion in net income a quarter. The cool thing about Pepsi is if you've ever been to a KFC, Taco Bell, or Pizza Hut, they only serve Pepsi products. They have a lifetime. Pepsi used to own Taco Bell, and Popeyes, but then they spun it off into Yum Brands. But whenever they did the spinoff, they have a lifetime contract. So that's why you'll go see Mountain Dew, Baja Blast at Taco Bell, because they have the lifetime contract with Pepsi. Let's keep going here. I'm looking at buying Rocket Lab stock and the metals company. I'd stay away from the metals company. Hey, what up, Couch Potato? Thanks for the follow, man. The metals company, this is a startup right here. They basically have these robots that go on the ground of the ocean and suck up the minerals like the nickel and the gold and aluminum all from the ocean. And the stock has been crushing it recently. I wonder if they're actually going to finally start selling something, because this is a startup right now. Because if you go to the revenue, the revenue is actually zero. So it says no data on revenue because they've never sold anything, not a product or a service. And they have more liabilities and assets, but they're losing 20 mil a quarter. So I think they just like issued money. They had like a round of raising money and it went successful. I think that might be why the stock's doing so good, but I'm not in love with that one just because they literally don't sell anything right now. Hey, yeah, Cheetos, yeah. What do you think about Hims? Yo, Carlos, how's it going, dude? Hope y'all are having a good night. So here's Hims and Hers. There's some good and bad news. So bad news, if we look right here, what happened this day? Hims used to sell a weight loss prescription. They used to sell Ozempic, but then NVO dropped their partnership abruptly with Hims, and that's why the stock fell so much. So Hims no longer sells a weight loss prescription, which made up a lot of their growth recently. Like, look at this. The revenue in the most recent quarter was at a record. It literally doubled from the previous year. It was up 110%, and that's why they deserve a lot of the hype that they have. But the reason they gap down is the growth is a little bit more uncertain in the future, but the numbers are nuts right now. The profit margins are nuts. I mean, they're making $200 million of free cash flow a year. Net income's just as good. And they have no debt. Debt-free company, lots of cash earning interest. Like, look at the cash from operations at 3x. So, but the future's a little bit uncertain, but I still like that one. Yo, Venus said, what app is this? Hey, yeah, this is actually a brokerage right here. If you go to the description, it should be the first link in the description. It's called Moomoo. It's also in that link right there in the link tree in my bio, the very first link there. If you want to get this app I'm on. It's my favorite one for doing analysis on stocks and stuff. So actually, someone just said NVO. So we were just looking at Hims. This is the company that just dropped Hims as a partner. So this is NVO right here. This is Novo Nordisk, and this is the company that owns Ozempic. So has anyone heard of Ozempic before? It's like that weight loss prescription. Elon Musk is on it. But yeah, look at this. 95% of the revenue comes from their obesity care products, which is Ozempic. And they're printing money right now. They're making $2, $3, $4 billion in net income a quarter. They have a nice 2.4% dividend yield. So I do like this one. But one thing you do got to be aware, the patent for Ozempic expires in 2027. Ozempic is literally like the saliva from like a Komodo dragon. Or no, it's not called a Komodo dragon. I forget the name of it, but something like that. Let's keep going here. So what do you think of the UBOT ETF? I've never heard of this one. So Daily Robotics Artificial Intelligence Automation ETF. So unfortunately, since it's a leverage ETF, I don't like it. Like, look at this. On the weekly, it hasn't really performed as well as the S&P 500. But let's see its top holdings. So it just owns a bunch of ETFs. So anyway, this is a leverage play on robotics and AI. So I'd be careful because in a down market, those really hurt you. Oh, what someone said DUOL, Duolingo. So awesome, great. Hey, thanks, Carlos. I appreciate you, man. Yeah, if y'all want to help me out, hit the subscribe button, hit the like button. We go live. We try to stream every day on YouTube and TikTok. So here's Duolingo right here. Has anyone heard of Duolingo? It's like that language learning app. Pretty boring concept, but what's not boring is the growth here. Look at this. So 83% of the revenue comes from their subscription business, and look at the growth. The subscription revenue is at a new record, up 45%. Like, look in the middle, these year-over-year growth numbers, it grows 40 to 50% every quarter. Just hits a new record every quarter. So incredible subscription revenue growth. And then they have the advertising, 7% advertising. How's that doing? Hey, the advertising revenue is up 38% year over year. So Duolingo's crushing it. They have no debt. Free cash flow was $100 million the most recent quarter, $35 million in net income. So Duolingo, I think, is going to be a winner in the long run. So thoughts on GOOGL? Yeah, Google, man, dude. I love Google, man. I mean, they own so many. They're like an ETF in one. Google Search. They own Android in the Google Play Store. They own YouTube. And the Google Cloud business. Like, look, just the Google Cloud business, it just hit a new record. They also own Waymo. They're going to be the quantum chip leader. Well, I guess the Google Cloud revenue doesn't want to load. But anyway, yeah, and they're also growing their margins right here. Revenue's up 12, but net income's up 45. So obviously this is a Mag 7 stock. This is a company you want to just buy and hold for the long run. Just forget about it. Just hold it and just don't ever sell it. You also get dividends. They spend $80 billion of their net income a year buying back their own stock. So that's why the stock doesn't go down. Well, it does go down, but someone said CNC. Yeah, this is Centene. They just pulled a UNH, so basically they're another Medicare, Medicaid company, and the government is not liking them right now. So that's why the stock just collapsed. So yeah, look at that. Medicaid at 56% of the revenue, Medicare. So the regulation for in the future is just so harsh on them. It just crushed their multiple. Like they're literally trading at 4 times net income, kind of like a UnitedHealth. So it's just, I think the risk reward is probably pretty good on this one, but it's probably going to be a tough sector to hold for the next year. But there probably are a bit undersold. Yo, no way. Peter Griffin said DB stock. So let's check it out. So this is a Canadian bank, I believe. So I'm not even going to try to pronounce that. Dutch's Bank, maybe. So Mag 7 is so priced right now. Yeah, yeah, there's not many too good deals out with the market pretty close to optimized. But here's Dutch's Bank. Let's see, dividend, 1.65% dividend yield. So yeah, investment bank is most of the revenue, private bank, corporate bank. Where's the revenue come from? So actually, no, they're not a Canadian bank. So look at this. This is why I like looking, yeah, hey, Crispy, you beat me to it. He said it's a German bank. You're right. So 40% of the revenue comes from Germany, then Americas, then UK, rest of Europe. So yeah, I like how diversified they are geographically. And let's check out the net income. $2 billion in the most recent quarter. You average it out, they're making $1 billion plus in net income a quarter. So they're a pretty good bank. Oh, Deutsche Bank. Oh yeah, that makes sense. Deutsche Bank. Let's see. David said P&G is let me know. Are you talking about, this is a Canadian company, Kraken Robotics. Yeah, actually, you probably are talking about this stock because look, it's at an all-time high right now. So check that out. Let's see. P&G products, services. How's that doing? Hey, doing pretty good. Double-digit growth. So let's see. Oh, actually, no. So revenue's down 27%. They are making net income every quarter, but they barely made any in the most recent quarter. 150,000. So I don't like how the growth just declined. Like the revenue just fell 27, but a really good balance sheet, very strong balance sheet. I'd be careful with that one. So W said Nike. So this is a tough one right now. They kind of just lost all growth. And check this out. I actually just sold out of Nike. I sold all my Nike at $78. But they're in a rough spot right now. So the reason they gapped up on earnings is because basically they said the worst is over, and I hope that's true. So the worst is over for Nike, which would be great because their margins literally just collapsed, and they kind of deserve like this huge decline. They absolutely deserve it. Because if you go to the revenue right here, the revenue fell 12% year over year. So revenue's down 12% year over year, but net income is down 85% year over year. So huge margin collapse. The margin was of 1.9%. They literally couldn't afford the dividend. So if we go to the dividend right here, it cost 40 cents a quarter. So the dividend was 40 cents in the most recent quarter. And the EPS, the net income per share, was only 14 cents. They couldn't even afford the dividend by half. So it's tough. Thoughts on ULTY and their dividend. So yeah, this is a covered call ETF. You basically just buy it to maximize your dividend income. But the thing is, you're not going to outperform the market in the long run. I mean, you can kind of see the trend of this. It's at an all-time low pretty much right now. But if we go to the dividend right here, look at that. It's just hard to trust something like this with a lot of money. I mean, the dividend says 133% dividend yield in the stocks. So you buy it to maximize your dividend income. They pay you like monthly yield, monthly payments. Small stocks we can invest in. Hey, 3 small caps I bought today. So, it's tough buying small caps, but all these companies are under $600 million market cap. Again, I don't really recommend these as like huge positions. Like, look, I literally bought $200, $100, and $100 of these stocks. So start them out as very small positions, and once they fall a bunch, maybe buy more. But those were the 3 stocks I bought today. They're all worth under $600 million. So, oh, yeah. Carlos said PLTR stock. Oh, then we'll look at METC. Yo, what up, Mo? How's it going? Happy or good night, everyone. Hope you're having a good night. So, Palantir right here. Yeah, sorry, my Wi-Fi is like bugging right now. I don't know what's happening. So, Palantir is pretty close to an all-time high. So, Eric said, "Can you explain why you bought Progressive?" Yo, Eric, you'd love my third most recent YouTube video. I go into every detail on why I bought them. Best way to support me, guys, just subscribe to my YouTube channel. It's called Nathan Robert, Linktree in bio. I'd really appreciate that. Or you can just type into YouTube Nathan Robert. I'm streaming on there too. If you miss anything, you can replay. But anyway, Palantir is at an all-time high right now, and here's why I think they kind of deserve it. So if we go to where the revenue comes from, 55% of it comes from the government. The government's like their best friend, they're handing them money. So many police stations use Palantir, and the revenue is up 45% from the previous year. So incredible growth on the government revenue. And the other half, commercial revenue, is also seeing some very nice growth, up 33% year over year, with like S&P 500 companies. And they're making net income every quarter. They have literally no debt. Palantir is a debt-free company. So they're everything investors want. They're like the true AI play, no debt, government contracts, So let's see. Load up on Broadcom. Let's check it out. AVGO. So Broadcom, this one's like second place to Apple. They've been performing incredibly. Another semiconductor play. And I like this one almost a little more than Nvidia because you get a nice dividend with this one. So check this out. Not crazy, but a 0.8% dividend yield. So pretty good dividend there. But a lot of people know Broadcom for the semiconductor solutions. But the best part about this company, in my opinion, is the infrastructure software. I mean, the growth has been incredible. It used to be, $2 billion a quarter, and it's just recently exploded to over $6.6 billion the most recent quarter. So the business has exploded. So if we go to the FCF, which is free cash flow, literally $6.4 billion of free cash flow, up 45% year over year. So incredible growth on Broadcom. Indonesia trade deal is big for Nike. Yeah, so was the Vietnam one because most of Nike's shoes are made at Vietnam. You're right. So let's see. Symbiotic. We already looked at Symbiotic 2 times, but you know what? Since you're always here, I'll be really quick about Symbiotic. So this is your main robotics play right here. They're my second favorite robotics stock. Wait, if I go to shareholders right here, look at that. The second largest shareholder is Walmart. So Walmart is the second largest shareholder of Symbiotic, and that's their main customer as well. They do warehouse robotics for Walmart and warehouses, but they have real growth, real IP, real patents. Tallahan, how's it going, brother? Hope you're having a good night. So revenue's up 39% year over year, but net income is up 60% year over year, or the losses have narrowed by 60%. So by this time next year, they're probably going to be profitable. So yeah, that's your warehouse robotics play. So let's see. Zim with the Z. Yeah, this is a shipping company. So Zim Integrated Shipping. So this is like a dividend play. This company has a rule where 50% of the net income they make will be returned to the shareholder in a dividend. So whenever they make net income, 50% of that's going to be paid in a dividend. Some quarters they don't make net income, like this year right here. They lost net income every quarter, so they never paid a dividend those quarters. But now that they're making net income again, they're paying dividends. And look at the year 2022. In 2022, they paid you $27 in dividends. Well, right now the stock price is $15. You got a whole lot of returns that year. So that company benefits from supply chain issues, like closing of shipping routes and stuff like that. Really benefits Zim. What program is this? Hey, Roger, if you want to get this app I'm on, it's actually a brokerage. It's in the link tree in my bio, the very first link there, this app I'm on. It's a brokerage. But let's look at Oscar Health. Yeah, so this company, I love the growth here. This one's another one that's kind of been struggling because they're in Medicare, Medicaid. The government is not happy. They're kind of regulating the industry right now. So that's kind of a big uncertainty for the company. But this one has seen incredible growth. And this is what I love so much about Oscar. Like, what other company can do this? Like in 2020, the full year 2020, the revenue was $590 million. Now for the full year 2024, it was $9.2 billion of revenue. I mean, the business has 10x. Literally just in the most recent quarter, revenue was $3 billion. So incredible growth on the revenue. And they're finally getting net income positive. I mean, they did lose money last quarter, but the trend's getting better. So I do like this one out of a lot of stocks, out of a lot of the healthcare Medicaids, probably more than like a CNC. Riot, please. Hey, yeah, that's like a Bitcoin proxy. If you want to speculate on chips, Intel is the best. I'm staying away from Intel. We looked at them a little bit earlier. They're losing an insane amount of money. Intel is like burning money hand over fist on free cash flow and net income. It's like, that's why they've underperformed. No way. Coach JV with the 39 roses, dude. I really appreciate you, man. If you got a stock you want me to look at, I got you, coach. So here's Riot Platforms right here. This is like a Bitcoin proxy, but the thing is, this company like mines Bitcoin, but they're not anywhere near all-time highs, and the price of Bitcoin is at all-time highs. So that's the only thing I don't like about Riot Platforms. But they do own a lot of Bitcoin, so I'd probably rather just own Bitcoin though. That probably wasn't too helpful though. I do apologize. So UPS for the yield. Hey, let's check them out. UPS. So they're like a shipping company. Let's see. For someone new to investing, what company should I watch? Should I do ETF? Yeah, I just buy the S&P 500, DJ. I love Google, Meta, Apple, Microsoft, Amazon, Nvidia too. So I'd go with like a mega caps. Don't speculate with the small caps. But here's UPS right here. This stock has not done too good. Look at that. Yeah. So UPS for a dividend play. Let's go check out the yield. So yeah, look at that. They have a 6.5% dividend, but look at the payout ratio, 96% payout ratio. So that's the only thing I'm kind of struggling with, the high payout ratio. Oh, oops, my phone's getting low here. Average daily parcel volume, 20.8 million. It did fall year over year. Let's see, net income. So yeah, look at that. They're making just 1 to 2 billion in net income a quarter, but the payout ratio is a little high. So that's the only thing I want to be a little careful with. So let's see. What do you think of VKTX? Hey, that's Viking Therapeutics, right? So this company, I remember covering them a little after this rally right here. So this company basically got FDA approved. They got approved to finally sell a prescription. But look, they sold all that news off because I don't think they've still never sold anything. So yeah, look at that. They still haven't sold anything. This company might deserve to be where it's at today. So look at this. The revenue, it says no data because they still have never sold anything. There's no product, no revenue here. And dang, they lost 45 million in the most recent quarter. So the assets are going down, but luckily they have no debt at all. Lots of cash. Yeah, literally $850 million of cash and no debt. So still no bankruptcy risk, but we investors aren't too happy with them not selling anything right now, I believe. So Dax said ALAB, that's Astera Labs. Yo, this one's on my watch list. I believe I do really like this company, but let me get a reminder on what they do. So revenue down here. Yeah, wow. Look at this. The revenue is up 144% from the previous year. Incredible growth. So revenue's up 144, and they made net income on that. 31 mil the most recent quarter, 24 mil the quarter before. No debt. Hold on. I'm going to re-add this one to the watch list because I might consider them. In the market cap, 15 billion. Yeah, so I do like that one. The fundamentals look great. Great growth, net income positivity. Oh, and here's a company. Yo, Dylan said Neo right here. This is a company I feel bad if you own this stock right here. So Neo, this is their Chinese EV company. This stock is pretty much like at an all-time low. Because look at this right here. So remember this, they literally lost in the most recent quarter, just in the last 3 months, they lost 900 mil. The quarter before, 970 mil. So they're losing $1 billion a quarter, and the whole company is worth 9.5 billion. So they're literally losing 10% of the whole market cap just in net income a quarter, plus the stock dilution. So it's tough. It's tough because they can't afford that. There's real bankruptcy risk there. That's why the stock's at all-time lows, in my opinion. So someone said Costco. Hey, dude, I love this one right here. So Costco, this is like your grocery store where you have to have a subscription to get into the Costco store. So it's a great business model because whenever you go there, you buy stuff in bulk. So consumers feel like you get a good deal at Costco. So consumers are happy. Costco's happy. They get that reoccurring subscription, high margin revenue. And look at the net income they're making. 1.92 billion in net income a quarter. So I do like Costco. They have a 0.5% yield. I know they sometimes do special dividends. So I'd like to get that one at a lower valuation. The valuation's a little high. Yo, Adrian, good to see you, man. Hope you're having a good night. Yeah, it says charge my phone. Let's see here. CACI. Let's see. Hopefully this isn't a small cap, but we'll check it out for you. What's the easiest way to discover really good new ones? You kind of just have to run into them. Like I like to look at ETFs. I sometimes look at YouTube videos and stuff. Study said, what app is this? Hey, this is a brokerage right here. If you want to get this app I'm on, it's my favorite app. It's an affiliate link, but if you want to get this app, it's in the link tree in my bio, very first link there. It's free. You don't have to like pay any monthly subscription or anything. But anyway, my favorite app for analysis. Let's go see link tree in bio, first link. But $10.4 billion company. And they actually, at first glance, I really like this company. So let's see, a 22 PE. Let's see, are they making net income? So yeah, look at that. They're making 100 million plus in net income every quarter. So that's great news. Revenue's up 11, pretty good balance sheet. Cash from operations up 16% year over year. So I can see why that one's doing pretty good. I mean, they're just making a lot of net income. So over 100 mil a quarter. And the PE is only at 22. Why did the market sell off today? Yeah, today we had an inflation report, and inflation came in really high. And so because inflation was so high today, it just delayed the odds of a rate cut. So, how is Jerome Powell going to cut rates with all this inflation? It was almost like a stagflationary report where our wages were going up. And anyway, I think we're able to see like the actual Fed rate. Does it go farther than July? No, it doesn't. Fed decision in July. Yeah, dang, the odds fell to like a 1% today. Anyway, they can't cut rates anymore, so all the interest rate sensitive sectors like REITs, home builders all crashed today. Let's see, Procter and Gamble. So PG, this is a staple right here. Like they own a lot of random stuff. Like they own like 20 plus $1 billion plus valued brands. Like this company owns Old Spice, for example, and like they own a bunch of toothpaste stuff, like in like Tide. So basically, in a recession, people are still gonna buy Procter and Gamble products like floss, toothpaste, deodorant, Tide detergent. Like people still buy this stuff. And if you go to the yield right here, you get a nice yield, 2.6% dividend yield. If you go to the net income right here. Look at that, over 3 to 4 billion in net income a quarter. I love how diversified these revenue streams are: fabric and home care, beauty, feminine products, beauty, healthcare, grooming. So I like the diversification there on Procter and Gamble. Probably a nice staple to buy and hold for the long run. It'll probably do good when the market's not doing good. Yo, Jay Monty said, I want to start investing. Hey, that's awesome, man. Your future self will thank you. And by the way, I don't sell nothing. I don't have a course, a book, a Discord, WhatsApp, Telegram. Watch out for people impersonating me. I'm just on here giving my opinion. So here's NU Holdings right here. So this is a crypto bank out of Brazil. What's up, DAXL? So yeah, NU Holdings, if we go to where the revenue comes from, 93% it comes from Brazil. So down there in South America and Brazil, that's where crypto is the most popular because their currency sucks over there. So that's why they use Bitcoin and crypto. But look at this right here. This is the best part, the bottom line. I mean, NU is printing money. Look at that. 500 mil the most recent quarter, or they're making 500 million every quarter. And it grew 47% from the previous year. So they're just printing that income. So what's the PE? PE ratio is a 30. So a 30 might still be a little high, but I think they deserve it. So I do really like this one, and it kind of just follows crypto. So, let's see. Friends don't let friends buy Neo. What up, Irv? Yeah, that's funny, man. Oh, and he said IHS stock. Yeah, if you guys got any stocks you want me to look at, let me know. I got to end the stream in 20 minutes exactly at midnight. Anyway, but if you guys got any last minute stocks, I will check them out for you. But here's IHS Holdings. So let's see, a $2 billion market cap. So pretty decent market cap, $2 billion company. Let's check out the financials here. So revenue, the revenue is up 5% year over year. So that's at least good because it did just decline like crazy, but it is up 5% year over year. And they did make net income in the two most recent quarters. Yeah, look at that. If we go to operating profit, they're usually making like 100 million of net income a quarter. So they're making net income every quarter barely. Ooh, but they are leveraged. So they have more liabilities than they have assets. Not good. Cash from operations did have a really nice slow growth there, but I would just be a little careful with this one. $2 billion market cap. But they are making net income, so that's the good news. So someone said AMD. Yeah, dude, AMD. I just made a short about this one. So AMD, and everyone was saying this. I remember I've been streaming for a couple months. I remember streaming down here. Everyone was calling AMD advanced money destroyer, and that was true, but it's no longer true because this is advanced money maker or I don't know, but this one has been outperforming Nvidia since the bottom down here. I mean, it was at the very low, it was 76 and it's 155 today. So it's a pretty much double from the bottom. Here's my cost basis. I got in at $124 a share. So it's not like I timed the bottom and I'm up 25% on this company, but let me give you some analysis on AMD. I like doing it on this app right here. So AMD stock right here. And AMD, again, has underperformed NVIDIA. NVIDIA is literally at an all-time high today, and AMD is still a little bit off all-time highs. But here's why I like them. Look at the PC GPU market share. Obviously, they sell GPUs, and they have a 17% PC GPU market share. And look, half the revenue comes from data centers. Check this out. They're actually a data center play. So look at this, the data center revenue is up 57% from the previous year. So I really like that growth on AMD. And then, client and gaming, embedded revenue. But look at the FCF, which is free cash flow. Free cash was up 91% from the previous year. Very nice growth there. I mean, the margins have just improved dramatically. And the net income was up 400% from the previous year. Literally last year, they made 123 mil. Now it was 709 million. So if we go to the net margins, I mean, margins grew 3x to a 10%. Monster balance sheet. Look at this fortress of a balance sheet. I mean, AMD has no net debt, lots of stuff. So I own them. I might be a little biased, obviously, but I do really like them. And someone in the chat said, can we look at T-Mobile? Yeah, so that's another one. They do report earnings, I think, very soon. This is the best performing like telecom stock, like better than Verizon, AT&T, and that's because of this number right here. This company, if we look at the net income, I mean, I'll just make it super simple. Look at that. They're making $3 billion of net income every quarter, and it's growing double digits, so obviously it's going to be higher in the future. But let's just say they're making $3 billion of net income a quarter. Well, here's the dividend. The dividend only cost $1 billion. It's on the left there. The dividend only cost $1 billion. So what are they doing with the rest of the money? Well, this is what I love about T-Mobile. They're literally buying back their own stock like crazy. They spent $3 billion or $2.5 billion the most recent quarter buying back their own stock, $5 billion the quarter before. So if you go to the total common shares outstanding, you now own 3.5% more of the company than you did 1 year ago, on top of the 1.5% dividend. So they've returned you literally 6% of your money back in 1 year through dividends and stock buybacks. So they're such a shareholder-friendly company, and they've had really nice stock price appreciation. If anyone's seen those Mint Mobile ads with Ryan Reynolds, it's bringing them a lot of growth. They also partnered with Starlink. If anyone saw that Super Bowl commercial, T-Mobile is partnered with Starlink. I think they own actually like a tiny bit of Starlink, so I think you get a little exposure through T-Mobile. Don't quote me on that though. I think someone told me that, and I just kind of believed them. But anyway, oh hey Dylan, what's up, dude? TENX stock. What's this one? 10x. It sounds like 10x. But 10x Therapeutics. Unfortunately, this stock has not done too good. So not one I'd really like to cover on here. If you look in the top right, you see market cap. This whole company is worth $24 million. So the whole company is worth $24 million, and they lost $10 million just in the most recent quarter. So this one has bankruptcy risk, in my opinion. Imagine that you buy the whole company at this valuation. You're buying a company that loses half the market cap in net income, or at least in the most recent quarter. Ooh, but look at this balance sheet right here. Hold up. Let's see. $111 million of cash with no debt. How did they get that cash? Oh, that's how. So they diluted the shareholder by $100 million? No way. I can't believe that. I want to look at this because we're getting to the end of the stream here. I'll just for fun. So I actually can't believe that. Hold on. We go to net income down here. No, we have not covered APLD. We'll check that one out. So if we go to total common shares outstanding, no way, dude. Look, this is the only reason they have money. There used to be only, 298,000 shares. Now there's 4 million shares. You've been diluted by 100%. So year over year. So you own half of what you owned from the previous year. So that's the only reason they have a good balance sheet. So at the end of the day, though, that does save them from bankruptcy risk. But still, whole company is worth, what was it again? 24 million. They lost 10 million. That's why it's so risky, man. But I guess it's not the end of the world because of that balance sheet. But they diluted the life out of you. So someone said APLD. Yeah, this is a company that Nvidia owns. So if we go to Nvidia's portfolio right here, Obviously, their main holdings are CoreWeave, ARM, and then the third largest is APLD. So this company just had a huge partnership with CoreWeave. Like imagine that Nvidia owns CoreWeave and APLD, and next thing you know, they're in a huge partnership together. And that's why they like gapped up on this day right here. So I'll show you the numbers though. They're up 5% on the day. So yeah, most of the revenue comes from data center hosting, but this is what I like to look at. I like showing you the numbers. Their cloud service business, for example, look at the growth here. It grew 220% from the previous year. I mean, that's incredible growth, at this growth rate, what's it going to be this time next year? So that's what I love about APLD. We are still losing money every quarter, so we do want to see them get closer to net income positivity, but they are deleveraging, revenue's growing nicely, and I can't wait to see what happens with the CoreWeave partnership. So this is actually one of my biggest losers. So someone said ChargePoint stock. Yo, man, I lost a boatload of money on this stock. So this is sometimes where it's a lesson. It's okay to take a loss on a stock. So look at this. You see the sell order right here? Check this out. I just like being fully transparent. And this is kind of my way to thank you for coming to the end of the stream here. Look at this. So I just like being fully transparent. Look, I sold 66 shares at $2.85. That's my entire position. I sold out of all my shares at $2.85. And thank goodness I did, because it just keeps on going lower. But you won't believe where I bought the stock. So look, I sold it all right there at $2.85. And guess where I bought the stock? It was way back here. Like, look at this. I bought the stock at $17. About 10 shares at $15. This is one of my biggest losers. So when I was buying the stock at the time, I didn't even look at financials. Like this loss right here was one of the main reasons why I now focus on financials, because this is the kind of company to just keep hitting newer and newer all-time lows. Yo, eat some. I would not buy ChargePoint, because look in the top right. You see the market cap? I'll make it simple. The whole company right now, market cap is worth $290 million. So you could buy in at the valuation of $290 million. And here's what you're buying. Let's say you bought the whole company at $290 million. Hopefully this loads here, bro. Come on. I know the Wi-Fi is slow, but come on, ChargePoint. So yeah, the whole company's worth $290 million, and look at these net income losses. I mean, they've never made money, and they're not even coming close. They're literally still losing 50, 60 million of net income a quarter, and they're losing all that money for a company that the business is just declining. There's no growth of the sales. They're losing a boatload of money. They're diluting the crap out of you. More debt than market cap. So that's the recipe to get a stock at all-time lows. So. And luckily for me, I sold the stock at a 60% loss, and I'm happy that I did do that. So sometimes it's okay to take the loss on a stock, because usually if it's a terrible company like ChargePoint, they'll probably just keep on going lower. So again, I just like being fully transparent with you. That's one of my bigger losses. Here, I'll show you some of my other losses. And these companies are just too cheap to sell. Like we're down bad on UiPath, Zoom, and all time. Look, literally all time, we're only up 11% in here. So yeah, we haven't exactly outperformed the market in this portfolio. But actually, in this account right here, this is my buy and hold portfolio, where once I buy a stock in here, I'll never sell it. And this portfolio has crushed the S&P 500 on a return money weighted average, which means it doesn't include my own deposits. We're up 25% year to date, and the S&P is only up 6%. And all time, if you're going to be an individual stock picker, this is what you want to see. All time, we're up 74%, where if I were to just put all my money in the S&P, I'd only be up 50%. And look, you can see every day I deposited. All those blue things are where I deposited. So I've always just been buying into here. So, oh yeah, we can look at BABA too. We're about to end the stream here. I do really appreciate y'all being here. If y'all want to support me, best way, hit the like button, hit subscribe. We stream every day, and I sell nothing. I don't have a course, a book, a Discord, nothing. So yeah, we go to the Chinese tariff tech. First off, my main favorite Chinese stock is ticker symbol Tencent, or TCEHY. They own League of Legends, Valorant. They own PUBG. They own 50% of Fortnite. They own Supercell. So if you're at a Clash of Clans, Clash Royale, they own that. Like, this is a game conglomerate right here. I mean, if this was a U.S. stock, they would be a Mag 7. Anyway, I love Tencent. But let's go look at Alibaba. This is like your e-commerce play for China. Basically Chinese Amazon. Charlie Munger's last pick, RIP. But, oh, hey, look at this right here. What is this? They're saying there's a bullish continuation wedge, and the rise probability is a 90%. So hey, that's some technical analysis. Look, wait, they were up 8% today. Great news. I wonder what the news was. Rise as China's economy shows resilience to Trump's tariff. Oh, so hey, that's interesting. So we can see some stats here. Alibaba has 903 million annual active customers. But best part, if we go to the net income right here, and this is in US dollars, 1.6 billion the most recent quarter, 6 bill the quarter before, 6 bill. So they're making a couple billion in net income every quarter. Great news. And you get a small, close to a 1% dividend yield here. I'm sure they're going to raise their dividend every year. So, yeah, basically Chinese Amazon e-commerce play. They own Alibaba or AliExpress, I mean. YMM is the one Chinese stock I have. Full Truck Alliance. So yeah, you're right. They're a Chinese company. We'll switch the revenue to USD just so we can understand them a little better. But hey, look at that. They've actually been performing very well for the past couple of months here. Let's see. So transaction service, freight brokerage, credit solutions. Let's see net income though. So yeah, look at that. 170 million in net income the most recent quarter. 50% net margin. Geez. And that was real. Wow. So 20% revenue growth, net income's up 100% year over year. So yeah, that's really good margin expansion on YMM. So I only own one Chinese stock, and the one Chinese stock I own is actually ticker symbol FUTU. This is Futu Holdings. And if you're wondering, oh, look at this right here. They've been making so much money that they just paid a special dividend of $2. But this is the only Chinese stock that I own, and I'm thinking about buying Tencent as well. But if you're wondering, what is FUTU stock? Well, it's actually the app I'm on right now. So this app called Moomoo, it's actually a brokerage. This is the app that I'm on right now, publicly traded. And by the way, if you want to get this app, it's in the link in the description, or it's actually also in the link tree. I'll paste in the chat, first link there. And it's an affiliate link too. So if you sign up for this app and deposit $100, we'll both get some free stocks. But anyway, if you're going to put money with the brokerage, let's see how they're actually doing in terms of financials. And look at this right here. Net income's up 108% year over year. Revenue's up 82. I mean, incredible growth because the margin is literally a 45%. So 45% net margin with this company. Obviously, they're brokerage, so look, they get brokerage commissions. That's half the revenue. And look at the growth. It's doubled to 114%. And also, because we're in a high interest rate environment, they're making a lot of interest income. The interest income is also up 53% year over year, doing really good. So, yeah, I really love this company. We can see the users. They have 26 million number of users, up 17% year over year. Client assets are at 106 billion. So yeah, that's one I really like. So yeah, if you want to get this app, link in that link tree right there. Also in the description if you're able to see that. But anyway, yeah, that was the stream. I hope you guys have a great rest of your night. Good luck tomorrow because I have a not so good feeling the market might be red again tomorrow. Like basically, if you didn't own chips or Bitcoin today, you were probably down 1%. Like me, I was down 1.7% year to date. It's like the chip sector is really leading the markets recently. So anyway, hope you have a great rest of your night. Yeah, see you later, crispy taters. Eat some. Michael, hope you guys have a great rest of your night. I'll see you guys in the next one. And don't forget to hit the subscribe button and leave a like before the stream ends.